Bloomberg News financial regulation reporter. Thanks so much for weighing in on that. I appreciate your insights there. Coming up, Square's massive acquisition of Afterpay shaking up the buy now, pay later industry, where Klarna is another rising player. Klarna CEO Sebastian Siemiatkowski with us next to talk about the new competitive landscape. That's coming up. This is Bloomberg. The buy now, pay later business has a big new kid on the block. Square's $29 billion bet on Afterpay is shaking up the ever-evolving credit landscape. Just one example of how quickly the banking industry is changing. Joining me now for his thoughts on the acquisition is Klarna co-founder and CEO Sebastian Siemiatkowski. Klarna, of course, competes with Afterpay, so this is a big move. As a competitor, Sebastian, what do you make of it?
Well, yeah, it's definitely a big move, quite interesting, obviously, to follow. But it's directionally speaking, what we've been, believing to happen for a long period of time is that, as you just mentioned, we're seeing a massive transformation of retail banking. It reminds me a lot of what I saw e-commerce and retail do 10 years ago. And there's going to be three areas of big players, right? The tech companies, fintech, and some old banks will try to reinvent themselves in this transformation. And so, from that perspective, it makes sense. What surprises me slightly is though that currently in the US, there's a massive momentum for buy now, pay later. Take Klarna's example, we're getting close to 20 million users growing at, 400% rate. And so just surprised to see what might be a distraction for one of the largest players over the next year at a very, very critical point of time when all of us are trying to, shape up and change this market in the US.
So have you gotten more M&A interest in the last 24 to 48 hours as a result of this? I mean, we had an analyst on the show yesterday who said Klarna could be a target.
Yeah, I don't know. I mean, we think more about what are our targets? We thought about PayPal, but it looked slightly overpriced at the time. So, well, we'll see.
You have bought, I believe, 3 companies just in the last month. Yourself. I mean, there are folks out there who think that buy now, pay later is just a feature of a bigger fintech company. How do you respond to that?
No, I think that's true. And that's, if you look at what Klarna does, for example, most people in the US may not be familiar with that, but we offer, for example, we have our own plastic card. We've issued over 500,000 cards in Europe. We offer deposit accounts, banking services, and so forth. So we have basically all of the features that you expect from the neobanks. Not all of them launched in the US just yet, but we see the market in a very similar way. Buy now, pay later to us is a feature. And what Klarna tries to do for merchants and consumers goes far beyond it. But it's a fantastic feature to unlock the market, and it also spells much better future for consumers because it is, free for consumers. It only charges merchants. It doesn't have all of the poor aspects of the traditional credit card industry, which is really, really bad in how it, tries to put you into debt, tries to charge you overdraft fees and push you into revolving and so forth. So it's a better, less predatory model that is much more consumer friendly.
Now, this is a space that Apple is getting into with Goldman Sachs. Of course, PayPal is in there. Now you have Square buying Afterpay. There is Affirm. I mean, how does this change the competitive landscape for you? Is this a competitive threat?
Well, I think, again, as I said, I think that my expectancy is that, we're going to have two companies that's going to spend a lot of time now figuring out how they're going to work together. And I think to us, that's rather an opportunity than anything else. When it comes to the big players, I'm not I think to some degree we're seeing the traditional tech giants in Silicon Valley overstretching. They think they can do everything. I think it's possible to be good at some stuff or excellent at some stuff, but very hard to be good at everything. And we see massive potential. And, we're neighbors here, not to another company, Spotify, that wasn't supposed to exist due to iTunes and Apple Music and is thriving and doing really well. And so we hope to be able to replicate that in the banking services in the US.
So I guess the question is being asked, does a company like Klarna make more sense as part of a bigger financial institution, or are you aspiring to be that bigger financial institution yourself?
I would say definitely the latter. I mean, I've been at it for 16 years, right? And we've had a fantastic journey so far, but we really feel like we're at the beginning of it. We're been very lucky to strike partnership with Sequoia and have Michael Moritz on our board support us for the last decade. And I think when me and Michael look at the future, we feel very, very excited about the next 10 years, because again, this is not the end. This is really the beginning of the transformation of retail banking. You can see all the trends, it's all happening, but it's still early days. And so similar to, asking Amazon 10 years ago, would they sell? I think, why would they? And why would we? This is just the beginning.
All right. I remember you using that Amazon metaphor before, so we will keep watching. Sebastian Siemiatkowski, always good to have you here. Klarna co-founder and CEO. Thanks for stopping by. Some other stories we are watching: a coalition of gig economy companies like Uber and Lyft is opening up a new front in the struggle over the legality of their business model. The companies want to place a measure on next year's Massachusetts ballot that would classify their workers as independent contractors, not employees. The Massachusetts Attorney General contends that Uber and Lyft drivers should be considered employees, setting up a showdown like we saw with Prop 22 in California. And sticking with big tech employee rights, a labor union may get the chance to reverse its loss to Amazon. Bloomberg has learned that a federal official has recommended overturning the results of a union election at an Amazon warehouse in Alabama. The National Labor Relations Board hearing officer says the election should be run again. Amazon can appeal this decision. The union accused the company of making anti-union threats and skewing the final vote. Coming up, Match Group out with their latest results. We're going to be speaking with the CFO and COO, Gary Swidler. Coming up, this is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. I want to bring it now to our Bloomberg Markets reporter, Kriti Gupta, for the latest. And Kriti, got to talk about Robinhood way up after that muted debut, and unclear why, it seems. What are you seeing here?
Well, you know, it wasn't too long ago when we had written this off as a flopped IPO, but it makes a comeback, 24%. That's how much it surged today. And here's why. It's all about retail traders, the power behind the stock. Our colleague Bailey Lipschul's reporting it was the top trade on Fidelity today with over 9,000 buy orders. You can see the impact right here, Emily. A 24% surge, actually going past its IPO price of $38. But it's not the only story I want to show you today, because you had a slew of earnings as well. When it comes to the markets, that Chinese regulatory scrutiny just isn't going away. And I want to start with the top, because this was the very first place that you really saw the market impact of it. Alibaba reporting earnings missing for the first time in 2 years. It's all about that China crackdown. You're starting to see it really affect their cloud businesses, their e-commerce businesses, which brings me to the latest development in that story. And that is, of course, the video game stocks. I really want to mention quickly that, of course, Tencent was down today and really seeping into other U.S. video game stocks here. Earnings stories here in terms of stateside stories. Let's start with Lyft. Great news after hours for Lyft in particular, coming out and reporting their first quarterly adjusted profit after bleeding cash since its founding. And of course, this was a quarter earlier than expected. So those shares really surging once again on that demand as well as cost-cutting measures. And I want to end with a kind of a downer story for Match Group, at least for now, in terms of after hours reporting. You are seeing shares down 4%. They reported great earnings, really talking about that momentum, but it's all about the Delta variant. What impact could it have on that progress moving forward?
All right, Kriti, thanks for wrapping that up for us. Appreciate it. Dating apps hitting record numbers in July with pandemic restrictions lifting, but can that momentum continue? For more, I want to bring in Match Group's earnings report and speak with Match CFO and COO Gary Swidler. So look, Gary, the results were good. What are the late pandemic behaviors, dating behaviors that you're seeing that are driving this?
Well, actually, we think the results were great, and people are out there dating again, and our results show that. We've seen real momentum through May and June, especially in the U.S., as we saw a really strong recovery and reopening. We're seeing that go through the U.K. and other parts of Europe now. Asia's a little further behind, but it should come online as vaccine rates go up. So we think there's a lot of room to run here as the world continues to recover.
Right, but there are new mask mandates now in place as of the last 24 hours here in California and across the country. And of course, the Delta variant is continuing to spread. Are you seeing engagement dropping at all as a result of this?
No, we really aren't. Our engagement remains really strong. It's higher than it was pre-pandemic. It's harder for people to meet in real life because workplaces and schools still haven't really fully reopened. So people are using online tools to meet friends and people to date. And that's going to continue. And now people have the option to go out and meet in real life as well. So they can meet first online. And if they like the person, they can go and meet them in real life. So the reopenings are definitely helping us. And I think we're going to continue to see people want to go out and meet people, just given that they've been locked down for a long time. So as long as we don't see the real restrictions on movement that we saw at the very beginning of the pandemic, I think we'll see tailwinds in our business. Mask mandates, I think people are able to work around those, especially in the warmer months. People will meet outside. People have been very resilient. You know, the last thing people want to do is stop meeting people and be by themselves. So they're going to keep turning to our products to meet people, whether that's virtual or in real life.
I know vaccination status has been really important to enable folks to say whether or not they are vaccinated. Do you find that people are actually being transparent about their vaccination status, and how's that playing out?
Yeah, I mean, I think it's become a critical factor in people wanting to meet and date people via our services, that they want to know if people are vaccinated. And people are putting that out there, a vaccine badge, we call it, because they want to let people know that they're vaccinated. And that opens up more people to be interested in them. So it's become kind of a badge of honor. We're seeing a high percentage of people put that credential on their profile, and we think that'll continue to increase, and people are looking for that. And so it's just a helpful fact, like many other helpful profile pieces of information. The fact that you're vaccinated is attracting others to you, and we think that's a great thing.
Meantime, obviously the Olympics are happening, and one scam has gotten a lot of attention. Tinder users changing their location to be in the geographic area of the Olympic Village, trying to meet with Olympians and actually matching with them. What's your take on this?
Well, you know, the Olympics are always a great time for us. People from all over gathering in one place. And so although it's been a little tougher this year with COVID, our products are still being used for the Olympics and people wanting to match with Olympians. And so this is something we see every few years. And, you know, we're excited that people find our products something to turn to when the Olympics are going on.
Okay, but are you doing anything to try to prevent users from, you know, disguising their location, if you will? Yeah. I mean, is that something you want to be happening?
No, I mean, we all have tools to combat bad behavior and people who shouldn't be doing the things they're doing. So that's one of a list of things that we'll watch for as we go forward here.
You also recently acquired Hyperconnect, and I know that this opens a ton of new possibilities, you know, whether it's video, audio, virtual reality. Talk to us about what this could mean.
Yeah, we're really excited about the Hyperconnect acquisition, and there's a bunch of different components to it. The first is we see a lot of growth opportunities for us in Asia. This gives us another 400 plus people on the ground in Asia. So a big team, highly capable team, really strong on the technology side with over 200 engineers and really highly talented advanced engineers. So that's a real shot in the arm for the company, and I think really could be beneficial for us down the road. And they've got a lot of expertise in video, which we talked about before. That's an important part of dating and meeting people online now. You want to do a video chat with them first. So Hyperconnect's really good on the video side. They also have some really good audio technology and things that we can import into others of our brands. So we're going to spend a bunch of time with them getting some of their capabilities into our other brands, which we think will pay big dividends for the company. We also think we can help them. They've got two really good apps in Azar, which is a video chat app, and Hakuna, which is a live streaming video app. And we can help them grow in Europe, in the US, and Japan, where we're really strong. So there's a lot of things we can do with Hyperconnect, both to help them grow and for them to help our other apps grow.
Meantime, Bumble, Gary, is opening a cafe in New York to help people meet in person. What do you think about that? Is that something that you think will work or is important, or is it something that Match might do?
No, it's really not part of our strategy. We're not in the cafe opening business. People have lots of different places to meet once they use our services to meet online. That's really the core bread and butter of what we're good at. And so we're going to stick to using technology to make people have joyous connections and meet people online. And then they'll figure out, I think, where to go from there. So I don't see us entering into the cafe business.
All right, well, we'll be watching how the dating business continues to evolve as the pandemic evolves. Gary Swidler, Match CFO and COO, appreciate you stopping by. Okay, coming up, Blue Apron shares down after its second quarter earnings report as customers return to restaurants. But with vaccines slowing and the Delta variant spreading, could that give the meal kit maker a boost? Our conversation with Blue Apron CEO Linda Finley-Kozlowski next. This is Bloomberg. Meal kit subscription service Blue Apron is losing customers as consumers return to restaurants. The company reported its second quarter results this morning with a net loss of $18.6 million. I want to dig into Blue Apron's performance and what new programs they have in place. Linda Findley-Kozlowski, Blue Apron president and CEO, with us now. So, Linda, shares opened lower but did recover some, though still closed down. Give us some color on what trends you're seeing here when it comes to customer engagement.
Yeah, so actually what we're starting to see is what we would consider to be a normal return to seasonality. And so we usually have a change between Q1 and Q2, going back to pre-pandemic times, because Q1 is the largest quarter for meal kit companies. And so you usually see some sort of a drop between Q1 and Q2. So a lot of what we're seeing right now is actually seasonality. On the flip side of that, what we're also seeing is that a lot of the work we've done around product initiatives that have driven revenue per customer, we hit record AOV this quarter and continue to grow that value per customer and sort of driving additional dollars from each customer in the base is continuing to grow and actually holding quite steady during the pandemic sort of reopening, although all of that is continuing to change right now.
So look, we were just talking to the COO of Match earlier, where, you know, mask mandates bad for their business. But in the case of Blue Apron, I wonder, with new mandates, new restrictions, the Delta variant increasing, could that boost your business in the short term as we continue to struggle to get out of this pandemic?
It'll be interesting because we were already seeing strong retention of cooking at home, habits and other things as we expected to. Again, we expected to see a dip as things started to open up again, but then we also expected to see it dip to higher levels than what we had seen pre-pandemic because of people forming these habits. And that has continued to hold true and continue to be even more valuable per customer because of these product initiatives that people are engaging with on a more and more frequent basis. So that continues to go forward, which means that so far what we've seen is it's stayed fairly steady as Delta has started becoming more of a conversation. But I do think the next couple of weeks are going to be very interesting because honestly, some of these mask mandates are very new to people, and the reactions of individuals is a little different now than it was in the beginning of the actual, the start of the pandemic. And so I think the next couple of weeks are going to tell us a lot about what happens to demand across a variety of industries.
Yeah, you've been working on add-ons like apps and sides and dessert, butcher bundles. At the same time, when you look at customer trends, I believe you peaked with 1 million customers in 2017, 375,000 last quarter. What do you see as a sort of realistic number where customers will stabilize? Because you obviously have, a ton of loyal customers. How many customers are going to keep coming back quarter after quarter?
Well, I think it's a different way to look at it because when you go back to some of those peak customer numbers, that was early days. And a lot of what's happened in between then is there's been a reset of the business, including, just a prime example, when you go back to 2018, we spent about $117 million in marketing. This is before I joined the company. And then in 2019, went to about $48 million in marketing. So a pretty big change and drop, which was why we had such significant declines in customers and revenue at that time, which was anticipated and planned as the company reset. I still maintain that the meal kit space is very new. I mean, you're seeing increased adoption overall. You're seeing increased interest, understanding the sustainability of meal kits, et cetera. And so now that we're leaning back into marketing and starting to rebuild in a much more sustainable way towards growth and getting to adjusted EBITDA positive next year, we can start to layer on top of that and build. But the market opportunity is actually quite large when you think about the broader food industry and trends towards buying food online.
Interesting. And I know you also have this Aprons for All initiative focused on sustainable meal kits. You've just done a partnership with Disney. We'll be watching how those play out. Linda Findley-Kozlowski, Blue Apron president and CEO, thanks so much for stopping by. Okay, coming up, the world of venture capital on fire with firms pouring billions into startups. Mark Andreessen, co-founder and general partner at Andreessen Horowitz, talks about the explosion of VC and funding in Silicon Valley next. This is Bloomberg. The golden age for startups. Venture capital is seeing a boom as investments continue pouring in, with startups seeing almost $300 million in funding just in the last 6 months. Mark Andreessen, co-founder and general partner at Andreessen Horowitz, sits down to discuss all of this on the latest episode of Bloomberg Wealth with David Rubenstein.
Two possibilities. One possibility is we've gotten carried away again, so we've gotten ahead of ourselves again, the same way we did in the late '90s, and things are just too hot, and that's a possibility. The other possibility is our society is going through a real technological transformation, and it was already going through a transformation before COVID, and I think there's a good argument that COVID has accelerated that transformation. A lot of digital businesses have really accelerated through COVID. And it feels like the world is going to change in some pretty fundamental ways coming out of COVID. And so in that case, you have these new tech companies basically driving this change and realizing the benefits.
Do you worry that because the economy might soften at some point if interest rates are raised, or just because of the business cycle, the wonderful world of venture capital will slow down a bit? And is that a worry for you?
So it's a cyclical business for sure. It has a history of boom-bust cycles, basically just like any other sector of the economy. That said, I guess I would say we do not have a great track record in our industry of predicting these cycles. And I think most of how we either perform or fail to perform is micro, not macro, which is to say it's based on the success or failure of individual companies. And if you just look at the history of venture capital and startups, many of the best companies have been formed during the hot periods, but also many of the companies have been formed during the cold periods, right? And there are pros and cons to those periods. And so, look, it's possible there's another cyclical boom and bust cycle. Our plan for that cycle would basically be to just keep going, keep working with our existing companies, help them through it, keep investing in new companies all the way through, and basically bet on these sort of micro-level, fundamental technological and economic changes that continue to happen.
It seems as if there are no losses anymore. In the old days, the venture capitalists would say maybe they'd make money on 10% of their deals and they'd lose money on 90%, or that's roughly how people might have looked at it. Now you seem to make money on everything. Does anything ever fail anymore?
I can confirm that is not the case. We made a commitment. This is true. We made a commitment to our investors when we first raised our fund. I said, look, we're trying to get to the moon. We're trying to do the moon shots. Now every once in a while we're going to have rockets blow up in the launch pad, put a big crater in the ground. And so I am pleased to say we do both of those. The statistical kind of layout of top-end venture capital, if you look at like the 50-year history of it, it's actually about a 50-50 success rate. And this is for kind of top decile venture capital, so kind of where you want to be. But it's basically 50% of the companies make money, 50% of the companies lose money. And then, of course, you need the 50% of the companies that make money to make more money than the ones who lose money. And that's the general statistical breakdown.
But it used to be the case if a venture capitalist did a very successful deal, the venture capitalist might make 4, 10, 15 times its money, her money, his money. Now you seem to make 500 times your money in some cases. So, for example, a deal that your firm did, Coinbase, seems to be one of the most successful venture deals of all time. Was that obvious to you when you made the initial investment?
No, these are not. Well, so we are 100% confident every time we make the investment that it's going to be a big company. We are wrong a lot of the time. These companies are very contingent. We like to say there's a lot of path dependence in the system. There's a lot of twists and turns along the way. Look, a huge part of it is the competence and capabilities of the founders, and then ultimately the CEO of the company. And of course, they deserve 99% of the credit when it works out.
Now, historically, venture capitalists used to price deals at, hoping they get a good rate of return. But a firm like SoftBank has come in with enormous amounts of money and paid higher prices than I think even you would pay or other venture capitalists. Has that helped the business, hurt the business, or is it too early to say?
Yeah, so I'm a market fundamentalist. I have great respect for anybody who's fielding money, where they're taking responsibility for the results. And I don't like to prejudge. And I think SoftBank has made some actually very good investments. I would say sometimes that amount of money is very helpful to a company, which is it really helps them kind of bootstrap and get big and scale. Sometimes too much money is very damaging for a company, right? And you can really kind of screw up a company. And I think that's also happening.
Andreessen Horowitz co-founder Mark Andreessen with David Rubenstein there. You can catch the full interview tonight on the latest episode of Bloomberg Wealth with David Rubenstein, 9 p.m. Eastern. Now, shares of Nikola sinking after the embattled clean energy truck maker cut its delivery forecast for the year. The company reporting a narrower loss than Wall Street expected in the second quarter, but just days after its fallen founder was charged with misleading investors. Supply chain problems mean a rethink for Nikola's ambitions this year. Ed Ludlow joins us now with the latest, and you actually spoke to the current CEO who's cleaning this all up, or trying to. What did he tell you?
Right, it's an extraordinary story where they go through this kind of trauma of their founder being charged with criminal and SEC charges.
Some drama.
And then in the background, they're trying to get the company back on track. But the long and short of it is they will now only make 25 to 50 trucks this year. They were going to make 50 to 100. What's so amazing and shocked me when I spoke to the CEO is that of those 25 to 50, they won't even be able to sell all of them because they'll be missing parts like semiconductors. And until that they can retrofit them, they're not able to put them down as revenue. So they'll just give them away for free for testing purposes and hopefully sell some more later.
How frank has the CEO been with you about Trevor Milton's behavior? I mean, is he throwing him under the bus or is he defending him?
So the company and Mark Russell, the CEO, have been very careful about what they've said, but they've been consistent. So they say this is only about Trevor Milton. The charges only relate to Trevor Milton and the actions that he took and the things that he said on the record, on social media like Twitter and in interviews. But he did say it's hard to draw a line in the sand with this because by association, people will remember the company for this criminal and securities fraud investigation.
Right. I mean, do they need a rebrand?
It's very hard to do a rebrand. You have Wall Street analysts saying that there will be scarring. That was Chris McNally from Evercore, that these executives will have scarring from the experience. But what Mark Russell told me was that there's no judge that makes this all go away for everyone else that was there at the time. You know, he doesn't just hit the gavel, as Mark Russell put it, and then suddenly everybody's cleared. They'll always be associated with what Trevor Milton did.
Meantime, it's not all easy in the electric semi-truck space. Tesla has delayed the launch of their semi-truck. Where does that stand? What does that mean for Nikola?
Right, so this is really interesting because Tesla has pushed back semi to sometime in 2022. On paper, Nikola will still have a battery electric truck with customers that generates revenue before they do. We're talking about really small volumes though. They still say that 1,200 trucks, battery electric trucks, is on track for 2022. And then in 2023, they want to launch their fuel cell truck. All of this is still possible, the CEO told me, despite the supply chain concerns.
And how does that compare with numbers we might see from Tesla?
Tesla, we don't know, because I think the thing about Tesla that everyone's a little bit worried about is that it seems as if, according to sources and what's said on earnings calls, Tesla feels like they should prioritize other things ahead of semi-truck. That their thinking is, well, maybe we have bit off a bit more we can chew. Let's push semi-truck back until we have our own house in order with Model Y, with the factory in Austin and in Germany as well.
So who are the main customers here? In this market, I mean, this is not your typical Model 3, Model S, Model X
This
customer.
is what I loved about covering the story, that you had this eccentric founder who was charged with criminal and securities fraud charges, but he made something sexy, which was boring semi-trucks that carry heavy objects from A to B. These are fleet operators, old school legacy trucking companies. They're breweries who operate, you know, big trucks carrying kegs back and forth between the brewery and bars that they sell them to. It's not historically been a dynamic area with technology at the forefront, but they want to make that because there's a really good use case environmentally and cost efficiency wise for doing electric and later fuel cell trucks for trucking.
And that is quite an adjective ad given the Tesla Model S, X, Y spells.
Yes, quite.
Something similar. All right, Ed Ludlow, thank you so much. We'll continue to watch your reporting on the Nikola story as that unfolds. And that does it for this edition of Bloomberg Technology. Make sure to stick with us tomorrow. Earnings will continue. We're going to have full coverage of Etsy, Uber, Electronic Arts, and more. You won't want to miss it. I'm Emily Chang in San Francisco. This is Bloomberg.
This is Rich Jigga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me see. Say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of predominantly Asian artists, really making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. To be honest, I would even go to the bathroom here. I would take pisses here, you know what I mean? It was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and just the shit that he was saying, the memes he was making. But I didn't know that he rapped or anything like that. I really didn't. And he came up with that stick like 2 weeks later.
12 in the morning, pop shells for a living and berry gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. Let's do the sound check.
How was it?
It was tight.
So Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, and it's just more entertaining. We just edited it as tight as possible, put it up, and it really worked.
Yo, this nigga got a pouch on and a Reebok pouch.
This is the hardest nigga of all time.
You said when you come for a chigga like me. That was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago, It's #2 on Billboard on the R&B charts, which is crazy for, you know, independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
"It's just Taco Bell, what could possibly go wrong?"
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1.
I was the third person online.
So why'd you get here so early?
Because I want to see
I want to touch him.
What do you guys think of Joji?
He's That's my dad, son.
Did you guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it. And that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But 88 Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit.
So keep an eye out for 88's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said, it feels like I've been released from prison. Do you want these, Mrs?
Definitely.
Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months.
It's
Hi, it's Jade.
Oh. So you can talk to Jade through this.
Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya! When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. I have a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Yeah, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in the house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board. Thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work, I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
I'm about to expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone is a girl, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like,
Canada.
Is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone.
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short, don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man, but then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己，我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
I'm about to expose everything you won't admit.
And action!
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What up everyone, it's your girl, Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room, they had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
it was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone.
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short, don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man, but then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up everyone, it's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what?
Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals, there's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
You don't write about cars for a living without meeting some pretty interesting characters. So I'm circling back and getting cozy with some of my favorite automotive aficionados. We'll talk shop, luxury, and passion in a new series I call Crossing Lanes.
Well, good to see you again. What's it been, a couple of years, right?
I think a couple of years, yeah. Thanks for having me back.
Yeah, there's a few new things. I brought something I think which could not be more Americana. This is a 1958 Imperial. Just the epitome of American optimism that post-war, we won World War II, now we started a space program, all cars had fins and the Jetsons was coming on TV.
How many feet is this car?
I don't know. People lose count after a certain
After
number.
20 feet.
Yeah, they're sort of like dinosaurs from another era. This would sort of be the demographic car that I think the average TV viewer would remember. I mean, look how much room there is in this car. Just hilarious. I love how huge the gauges are, like giant high plates. This was considered safety. This
Padded with leather.
Yeah, no great hurry to be safe. And the way you start is you turn the key and you hit the neutral button. Everything is push button.
Yeah, people think that's a new car thing, but actually,
No.
old car.
If you can type, you can drive. Just press the button and you pull away. How many cars can you cross your legs in the front seat?
I mean, none, except for this. And I'm tall, too.
Comfortable car, isn't it? You don't get all wind blown.
You can have a conversation, even though we're so far apart.
You wonder how many 16-year-olds took their driver's tests in these big stupid
I
things.
mean, what about the parallel parking section?
Don't
that
even
would
think
be an
about
issue.
parallel parking.
So, what cars did you grow up idolizing when you were a young kid?
You know, when you grow up in a little town in New England, anything with less than 4 doors might as well have been a Ferrari. Nobody had cool cars. I was 9, 10 years old. I was riding my bicycle up a hill and I saw an old man polishing a 1951 Jaguar XJ120, and I was fixated. He said, "Come on over, you want to sit in it?" It was unbelievable. I'd never seen anything like that. You have to remember, back in 59, 60, most car magazines were black and white. You didn't really get the sense of speed or excitement or anything from it.
Who taught you how to drive?
So many houses had abandoned cars in fields. And there was a 2CV in a field near my friend's house. And when we were kids, we'd go over there and work on it. And we got it running. And we would just drive it around the fields all day. And our moms, you know, would sit at the kitchen window and watch us. Okay, I did all right.
Once you finally started making some real money, what did you finally buy as a special car purchase?
Well, the first car I bought when I came to California was my 55 Buick Roadmaster, which I still have. I got off the plane, I had no place to live, and in California, you need a car before you need a place to live. So I bought the 55 Buick for $350, and I lived in that, I slept in it. I met my wife in it, I got married in that car.
Wow.
Drove the car to my first Tonight Show, and I still have it. That was a special car.
How would you define a luxury car?
Nobody does luxury like the French. The French put a premium on comfort while driving. The cars don't appear to be ostentatious or flashy, but they're exceptionally nice to drive and very, very comfortable. We Americans tend to confuse luxury with crashed, garish. I mean, look at Trump's apartment. Is sitting on a gold chair really comfortable? No, it's not luxury at all. It's like Oscar Wilde, you know, the price of everything, the value of nothing.
Well, have you ever paid more than you thought you should for something that you bought?
No, all I've done is buy too early. I see a lot of people, they buy something because they immediately think they're going to make a lot of money on it. Then when they find out it's not worth as much as they thought, now they hate the car. The most important thing is buy what you like.
Yeah.
And then worry about the price later. I don't mean that from like, oh, I'm so rich.
No.
Better off you pay a little bit more and buy something you truly enjoy.
Yeah.
You know.
If you were 21, 22, 23 now, would you still get into the business?
I always like telling stories and doing
Yeah.
comedy. I mean, I always like talking to people. So, yeah, I
That's a
figured
nice
I would. You know, my dad sold insurance, and he became manager. And once a month, to motivate the men, he would put on some kind of goofy show, or he'd play like the Sinatra song "High Hopes" and he'd juggle. And so I thought, well, maybe I'll sell insurance because you get to do a show once a month.
That is very interesting.
Yeah.
I love that. Well, Jay, it's been so great talking with you.
Yeah, it's always fun when you come by. We have fun. We have a good time.
Yeah.
And let's continue motoring.
Motoring. That's the proper term.
Mumbai can overwhelm you. For Indians, it's both New York and LA, Hollywood and Wall Street. It offers the sensory overload of the world's second largest country and intricate traditions crafted over millennia. It's a lot to take in if you only have a few days on this colorful but chaotic peninsula. I'm Nikki Eckstein, travel editor for Bloomberg Pursuits, and I'll show you how to make the most of Mumbai. India is outpacing a slew of Western destinations to become the world's 6th largest business travel market. And the Oberoi, a sleek oasis in the middle of all the action, is perfect for business travelers.
Good afternoon, welcome to Oberoi Mumbai. Nice to meet you.
Thank you. The staff is extremely thoughtful and detail-oriented. Hi.
Ma'am, welcome to the Oberoi. It's very refreshing in a weather like this. Why don't you have a sip?
Nowhere else have I been greeted with personally embroidered napkins and customized suites. Plus, the rooms are spacious, with comfortable beds and large work desks. Across the peninsula, you'll find the Gateway of India, Mumbai's most iconic monument. Though the city name was officially changed in 1995, most locals still call it Bombay. And just behind the Gateway is the Taj Mahal Palace, the city's most impressive hotel. If the Oberoi is all brains, the Taj is all beauty. As you wander the halls, you can feel the weight of Indian history, from the colonial styling to the modern-day masterpieces lining the hall. All the traffic and bustling markets in Mumbai can be dizzying, so yoga near the stunning pool offers a welcome respite.
Experience the luxury of this morning, so you can experience the complete vitality throughout the day.
When it comes to business dinners, head straight to the table, around the corner from the Taj. It's classy without being pretentious, and quiet enough for deal-making. That may be why the locals are obsessed with this spot. The menu is more trendy than traditional, with knockouts like sweet and sour Brussels sprouts and yellowfin tuna tataki. Plan to eat dinner late. 9 p.m. is standard. If you have a day off, escape the clamor of the city by hopping a ferry to Elephanta Island. Eventually, the city fades, and a sort of inner calm sets in. You'll be surrounded by sweet Indian children who toss snacks to flocks of seagulls that trail the boat. You can also hire a speedboat for about $500 to cut the journey from an hour to 25 minutes, but you'll miss the local color. On the island, you'll find a path with about 1,000 stairs and a handful of feisty monkeys. It leads to a series of amazing 5th century caves, lined with relief sculptures dedicated to the Hindu god of Shiva. If you can't make it across the water, you can stay right in the middle of Mumbai where there's plenty to see. Stop by a street-side coconut vendor. They're everywhere. And if you're still jet-lagged, the electrolytes will help. One of my favorite hole-in-the-walls in all of Mumbai is Shri Thakur Bhojanalaya. There's just one choice here: bright and flavorful Gujarati thalis, which are like all-you-can-eat sampler platters. The restaurant was passed down from father to son, and the son is very enthusiastic about his locally sourced cuisine. Since India has gone cashless, ask to add a 10% tip before settling the bill. You can also charge tips for bellhops and housekeeping back at the hotel. After lunch, hit the streets and find the perfect piece of India to take back home. D. Popley & Sons is a family affair where the owner keeps the real jewels hidden in the back room. The owner's son designs many of the pieces himself and sources the rest from Jaipur. Antiques are huge in India, but you can't take anything that's more than 100 years old out of the country. You can, however, pick up carved elephants and crystal drawer pulls salvaged from Maharaja palaces at Essagi's, just next door. Nearby at Phillips, I also found beautiful folk art figurines and an amazing vintage photo collection. For clothing, there's a great spot called Bungalow 8, hidden under the bleachers of Mumbai's biggest cricket stadium. It's tricky to find, but you'll be rewarded with the prettiest kaftans and block-printed scarves, all arranged by color. But back to business. If you have one last deal to close, head to Bombay Canteen. The menu is an ode to India's regional recipes and native ingredients, like red snapper ceviche in a kokum broth or Kashmiri lamb. And don't miss a drink at Air, the rooftop bar at the Four Seasons. Guest bartenders shake up some of the city's best sundowners. Go to make one last impression with colleagues. Or let Bombay make one last impression on you.
With SUVs growing in popularity, it only made sense to get some on this show. So in this review, we're going to compare 3 of the best rated luxury SUVs on the market. This isn't going to be easy. We've got our hands on an Audi Q5, a Porsche Cayenne GTS, and a BMW X5. I've decided to spend a day in the Hamptons with each of them to get an in-depth look.
Now this is the Q5, it's Audi's mid-size SUV, and it starts at about $41,000, which is way more affordable than the other 2 cars that we're looking at.
This is kind of like the iPhone of luxury SUVs. It's designed so well, but it's also affordable within the segment.
This is a 4-cylinder, all-wheel drive, 7-speed automatic with paddle shifters, 252 horsepower, and there's no lag. Immediate power, immediate response. The minute you step on the gas, you're there. Q5 has by far the most futuristic interior of the 3 cars. It's minimal, it's clean. The sunroof spans the entire width of the ceiling. It's really cool. There's plenty of room for 5 adults, lots of headroom, but this is the smallest car of the ones that we're testing.
The trunk is 29 cubic feet, which is in the middle of our range. A family on a trip might have trouble fitting everything in.
There are other cars that are more powerful, that look more distinct, but it's also really affordable, and Audi has really kind of hit a sweet spot.
So how did it add up? The immediate response really made me feel in control. The horsepower was a little weaker at 252, and the 22 mile per gallon means that this is in the middle of the road. Looks-wise, it was a bit conservative. It's the smallest of our 3, but with a sleek interior. And the pricing is the best at $41,000.
Now this is the BMW X5 Hybrid. That means it gets 56 miles per gallon combined between the electric motor and the conventional engine. This car starts at $62,000, so it's right in the middle of our group. The electric motor and the engine switch off depending on what drive mode, how fast you're going, all of that.
What you won't find out from the stats on the website is how big this car feels when you sit in it and how small it drives. It's a nice balance.
So the interior, it's not as futuristic, it's not as clean and modern feeling, but it's also a little less full of buttons and levers and gauges. This does feel like it's the roomiest of the 3. I think a lot of it has to do with the natural light. The most visibility for sure.
And with the seats in use, the trunk still comes up with nearly 36 cubic feet, which is massive. To recap, the handling was exceptional. 308 horsepower is middle of our range, and an amazing 56 miles per gallon with the combined electric motor. It was sporty without being over-aggressive. The roomiest, but with a toned-down interior. And at $62,000, it's mid-range for our selection.
Now the third car in our group is the Porsche Cayenne GTS. This is a higher tuned version of Porsche's Cayenne, and it starts fittingly at $97,000. That's by far the most expensive of any car of our group, and it's also the most powerful. Porsche was among the first of the luxury car makers to introduce an SUV. It really sets the standard for a lot of things. The engine here is a 3.6 liter V6 twin turbocharged engine. 440 horsepower with almost double the horsepower of the Audi, 443 foot-pounds of torque, and you definitely feel it when you push the gas pedal. The thing that you notice are the buttons and levers and knobs and vents. So if you're someone who likes this cockpit stuff to play with, you're gonna love this car.
This trunk was actually the smallest at 24 cubic feet, but after you put the seats down, you'll get by. It drives fast, it feels really luxurious inside, it's really striking to look at, it just costs a lot of money. Okay, this car was the most powerful. 440 horsepower, 434 foot-pounds of torque. Unfortunately, only 19 miles per gallon combined. This is a true sports car in SUV form. It had decent space and the interior was loaded with gadgets. But the downside, I'd say, is price. $97,000 means this car will dig deep into your wallet. The luxury SUV segment is a competitive field. There are a lot of really confident players, and these three are all excellent vehicles. However, after 3 days of driving, I felt the BMW checked the most boxes in terms of performance, agility, style, and value. Was it the fastest or the most powerful? No. But it was the most versatile while moderately priced for a luxury SUV. With the largest interior, the most visibility, and the fact that it's a hybrid with a 56 miles per gallon rating, that just pushes it over the edge. This car has a great value and anyone would be happy to have it.
The perfect sports car should combine sexy good looks with nimble steering, aggressive power, and a high-quality cabin. It'll be expensive, but not so pricey that it's out of reach for everyone. Porsche, Mercedes, and Jaguar have 3 of the top sports cars on offer today, but which is the best for you? Let's get the numbers out of the way. All 3 cars have impressive stats. The Porsches come just slightly behind the Benz and the Jag, but each is a thrill to drive in its own way.
This is the 2017 Porsche 911 Carrera Cabriolet. The engine in this is a 420 horsepower, 6-cylinder boxer engine mounted in the rear. This is Porsche's famous engine.
It's difficult to describe the feeling when you get behind the wheel. This is where that mystical Porsche X factor comes in. The rear-wheel drive on 20-inch Carrera S wheels and Porsche torque vectoring grip the road better than any other model in our group. The AMG GTS is faster and more fun to drive than any other Mercedes. I think it feels like a rocket ship.
This car has a lot to offer. It has that amazing V8 engine, it has the horsepower, it has the torque.
Of course, if you're not careful, the rear-wheel drive AMG will fishtail forward with a mind of its own. That said, it's amazing in a straight line. This is the two-door coupe Jaguar debuted in 2015 as a way to get back in the game. And the company did it with flying colors.
The handling is great. I mean, this car is so perfectly balanced. It's really a treat to drive, especially on windy roads.
The torque that you feel when you drive it is the most impressive of the group. But it's not as connected to the road as the 911, nor as smooth as the AMG. It is tight when it comes to steering and braking. The 911 is eminently recognizable, yet after all these years, it still impresses. The front end is flirtatious, the rear is muscly, and the headlights are friendly. This is Mercedes' bad boy halo car meant to recall the glorious Gullwing SL that Mercedes made in the 1960s. The idea is that its sexy allure will attract young new fans to the brand.
This is the car you want to get to make a really loud statement.
The Jag is all muscles and roar, punched up at the seams like a football player. If you kind of like a hunky mass of metal and gears under your foot, this one is the car for you. Porsche was the first sporting brand to introduce the PDK paddle shift technology, which is quicker and better for city driving than the manual. There is also a back seat in this option, something the other two don't have.
Now, I don't know if you'd put anybody in that backseat except for maybe your dog or someone you don't like, but it is back there and you can use it in a pinch.
Inside, I loved how the Mercedes looks. It has crazy octopus-like round dials all the way through the center and the dash, and everything felt thick and rich. There is plenty to see inside the Jaguar. Lots of loud blue stitching, performance seats, and even a handle for the front passenger to hold onto for dear life. This is the least well done of our three when it comes to interior quality and design, but it's still pretty great. The bottom line? You can't go wrong with any of these incredible machines. But if you want the whole package at the best value, the 911 is the clear winner. Sure, it's not as aggressive looking as the AMG, and it has less power than the Jag. But its incredible connection to the ground, its cozy perfect German handling, its superior suspension, and its minimal but quality interior mean the 911 Carrera S Cabriolet more than stands its ground. word Ferrari, you probably think fast, sleek, or maybe risque. What you don't think is practical. And Ferrari is not the first car you think to take to pick up your Christmas tree. But that's exactly what I did. I drove a Ferrari GTC 4 Lusso 2 hours outside of New York City to Barclays, a 4th-generation orchard and tree farm. I wanted to test out Ferrari practicality.
Welcome to Barclays Tree Farm. I'm Steve Barkley.
I'm Hannah Elliott.
Nice to meet you. Should go find your perfect tree?
Let's do it.
Excellent.
What kind of trees are these?
Oh, we've got Douglas fir and Norway spruce in here.
This looks great.
So this is the one,
Yeah,
huh?
I like it. It's good.
Okay, let's do it.
There's not exactly enough room in the back for a tree, but the Lusso has all you need for this errand. It's a 4-seat hatchback that Ferrari debuted last year. Plus, the Lusso has something really helpful, practical even. It's higher off the ground than a standard Rari. Getting in and out wasn't the usual awkward struggle I often have with low sports cars. I would even call this shockingly drivable.
This is the perfect Ferrari for people who love to drive. And I know that sounds crazy because it's the hatchback Ferrari, but the thing about the car is it has a V12 680 horsepower engine on all-wheel drive. That means it has the beating heart of a Ferrari track car that will compete with anything from Lamborghini and McLaren, built into this package that is totally functional.
And an elaborate traction and stability system in the rear that Ferrari calls thrust vectoring. Basically, it smooths out the car's response to unstable conditions like snow, ice, or bumpy roads.
I mean, I had this buying holiday decorations at Target. We had the tree on the top. I had this in snow and slush and ice, and it performs so well.
Inside, the front feels like a very luxurious cockpit, which makes sense after all, the word lusso means luxury in Italian. The back is spacious enough for a couple of adults, and it roars from 0 to 62 in 3.4 seconds. Top speed is 208. So what gives? Why did Ferrari make a practical car? Well, to hold on to its most loyal fans. Now, there are rumors that Ferrari will unveil an SUV in 2018, but until then, it hopes to keep Ferrari customers in the family with the Lusso. So hang on, Ferrari fans. Next year, maybe Santa will leave a prancing pony SUV in the driveway. Until then, the Lusso will do. Wow, this is a Callaway Corvette Aerowagon. It is the most powerful car made in the US, period. It's supercharged with the supercharger pushing up all the way through the hood. 757 horsepower, this car will go from 0 to 60 in 2.7 seconds, which is nuts. So let's put it to the test. I'm going to head out to Rockaway for lunch, and we'll see what this beauty can do. So Callaway, the very same name that engineers golf clubs, modifies these Corvettes. And in this Aerowagon, the main upgrade is the supercharged engine, and it's so fast.
The fuel efficiency is 27 miles per gallon at speed on the highway. That's like prime optimum conditions. But it's still pretty incredible considering most cars with 757 horsepower get like 12 to 13 miles per gallon.
So the Aerowagon part of the Callaway Corvette is totally new this year. It's a huge departure from what a typical Corvette looks like, and that's by design. The trunk is enormous, and that's what you're really getting by choosing to have this option. The interior is just like the regular Corvette that you'd buy directly from GM. It's very much like a cockpit. So the Belt Parkway isn't exactly the Autobahn, but I was able to get a feel for the strength of the supercharger, and I made it down to Rockaway Beach in no time flat.
Anna!
The starting price is about $130,000. The money goes toward the engineering that makes this car so powerful and fast. But still, that is so much cheaper than what you might find at Ferrari or McLaren or Lamborghini. This can keep up with all of those cars, and it's far less expensive. Sometimes I don't trust love at first sight, not even when a car looks this good. So I decided to put the Tesla Model X through its paces for 5 days in the mountains along the California coast. I needed to know, was this just a crush or a lasting love affair? I first drove the $151,000 SUV briefly in Los Angeles last year, and at the time thought it was one of the best cars I'd ever tested. But a 340-mile road trip can make or break any relationship. One push of the button and the Model X will automatically route your trip according to where the superchargers line up. It probably won't be the fastest route, but you know you won't run out of juice. We were on our way. It was the start of something beautiful. The seats are situated high inside, but they're easy to access, even the back row. And the interior cabin is so quiet I could hear crickets chirping outside as I drove, with the windows up. The car has almost no body roll around corners, and it handled beautifully on a sandy beach. I will say that the battery gauge can be deceiving. It doesn't decrease at a stable rate, so you can jump down in range a lot quicker than you expect. We left this morning with a full charge, and we've been driving for 4 hours or so, so we're down to about 77 miles on the battery. So I asked the car to find us the closest supercharger, and we're driving there now, and we should get there in about 12 minutes. Turns out I had some major time to kill. Hey, Grandma. Oh, nothing much. How are you? Back on the road, I could focus on the feel of the all-wheel drive, test the 3.2-second 0 to 60 mile per hour sprint time, and the 762 equivalent horsepower. It feels really fast when you push down the gas pedal. The brakes are regenerative, so you have to get used to their different feel. I never really did. And the automatic front doors can be tricky. They open when you least expect it. At the end of this trip, I realized the real question here is not, should you buy this car, but do you want to join the electric lifestyle? You really do feel virtuous when you drive it. No fossil fuels here. But owning an electric car saps your time and energy if you're not deliberate about charging. It makes it harder to be spontaneous and free. And you have to be okay with giving up the raw, pure feeling of driving a mechanical car. But if you are that kind of driver, the kind that wants to be on the cutting edge of luxury and technology, you're going to fall in love.
The season is upon us, and everyone, including me, is thinking about what to pour for all those holiday gatherings. Hi, I'm Aileen McCoy, here to talk about the holidays and wine. I've picked 3 under $30. Yes, $30. The first wine is a white. It's the 2016 Abbazia di Novicella Kerner, and it costs only $20. Kerner is an exotic white varietal, but what you really need to know is that translates into deliciousness. This wine is also from an unusual varietal, and unusual, obscure varietals are really in right now. It has fantastic aroma. It has lovely zingy fruit flavors, which are very bright and crisp, so that you feel the wine is bigger, richer, and will go with something that is really quite serious in terms of food. Now we're ready for the red. It's the 2014 Chateau Cartier from Saint-Emilion in Bordeaux, and it costs $27. Classic Bordeaux's do not all cost $100 and up and have to be aged for decades. This is made from 100% Merlot. It's ready to drink right now. Let's taste. It has lovely plum and cassis aromas, just the way a Bordeaux is supposed to, and charming fruit that's really delicious, along with silky tannins. Because it's so fruity and easy to drink, it will go with everything from roast turkey with dressing to a juicy prime rib, and it's perfect for white wine snobs to sip at a cocktail party. Now for the best, the sparkling wine. This is the Schramsberg Mirabelle Brut from California, and it's only $25. It's a blend of Chardonnay and Pinot Noir, and it was aged in 19th century caves on Diamond Mountain. Now let's pop the cork. Bubbles are essential for the holidays and look festive in a glass. The smell of this wine is like just baked brioche, and the flavors are lemony tart and so refreshing. Keep a few bottles in the fridge for when friends stop by or when you need to perk yourself up while you're cooking. Cheers.
When you hear the word Ferrari, you probably think fast, sleek, or maybe risque. What you don't think is practical. And Ferrari is not the first car you think to take to pick up your Christmas tree. But that's exactly what I did. I drove a Ferrari GTC4 Lusso 2 hours outside of New York City to Barclays, a fourth-generation orchard and tree farm. I wanted to test out Ferrari practicality.
Welcome to Barclays Tree Farm. I'm Steve Barclay.
I'm Hannah Elliott.
Nice to meet you. Should go find your perfect tree?
Let's do it.
Excellent.
What kind of trees are these?
Oh, we've got Douglas fir and Norway spruce in here.
This looks great.
So this is the one,
Yeah,
huh?
I like it. It's good.
Okay, let's do it.
There's not exactly enough room in the back for a tree, but the Lusso has all you need for this errand. It's a 4-seat hatchback that Ferrari debuted last year. Plus, the Lusso has something really helpful, practical even. It's higher off the ground than a standard Rari. Getting in and out wasn't the usual awkward struggle I often have with low sports cars. I would even call this shockingly drivable.
This is the perfect Ferrari for people who love to drive. And I know that sounds crazy because it's the hatchback Ferrari, but the thing about the car is it has a V12 680 horsepower engine on all-wheel drive. That means it has the beating heart of a Ferrari track car that will compete with anything from Lamborghini, McLaren, built into this package that is totally functional.
And an elaborate traction and stability system in the rear that Ferrari calls thrust vectoring. Basically, it smooths out the car's response to unstable conditions like snow, ice, or bumpy roads.
I mean, I had this buying holiday decorations at Target. We had the tree on the top. I had this in snow and slush and ice, and it performs so well.
Inside, the front feels like a very luxurious cockpit, which makes sense after all, the word Lusso means luxury in Italian. The back is spacious enough for a couple of adults, and it roars from 0 to 62 in 3.4 seconds. Top speed is 208. So what gives? Why did Ferrari make a practical car? Well, to hold on to its most loyal fans. Now, there are rumors that Ferrari will unveil an SUV in 2018, but until then, it hopes to keep Ferrari customers in the family with the Lusso. So hang on, Ferrari fans. Next year, maybe Santa will leave a prancing pony SUV in the driveway. Until then, the Lusso will do.
The design of this soy sauce bottle goes back to 1945 in Japan. A teenager named Kenji Ekwan had witnessed the aftermath of the atomic bomb falling on his hometown Hiroshima and was mourning the loss of his sister and father. After seeing the devastation, Ekwan's path changed. He first enrolled as a Buddhist monk, following in the footsteps of his father, but instead he decided to become a creator of things and bring happiness to people. As a young designer, Ekwan got a contract to design a tabletop soy sauce bottle for food company Kikkoman. Soy sauce is a must for Japanese meals, but it was originally sold in big bottles that were hard to hold. It took Ekwan 3 years and about 100 prototypes to complete the design in 1961. The result is a small glass bottle with a narrow neck, a shape reminiscent of traditional Japanese sake flasks. It allows you to see how much sauce is left. It's stable on surfaces and comfortable to hold. The inward angle of the tip of the spout is also perfect at preventing drips and controlling flow. The design of the little soy sauce bottle was just the start of Ekwan's great journey. He also went on to create other icons of Japanese design. In Japan, Ekwan has become almost as recognizable as his bottle, and 50 years later still appeared in commercials for the soy sauce. Today, the bottle can be found on the tables of homes and restaurants in more than 100 countries. And in 2015, the bottle was even exhibited at the Museum of Modern Art in New York. Simple but elegant, this is the design made to create a small moment of happiness. without you even knowing it. The design of this shoe starts in Oregon in 1981 and with a man called Tinker Hatfield. He was an architect for Nike, hired to draw up offices and showrooms on the company's campus. After making a statement on the outside of the building, he was asked to join the designers on the inside. In a race to develop sneakers, a former NASA engineer had recently introduced the idea of sealing air bubbles in the soles for extra comfort and performance. But competition was fierce, and Nike still needed an edge. Hatfield headed to Paris in search of inspiration. While he was there, he visited the Pompidou Center, a radical building famous for its inside-out design, which exposed the building's components, like escalators and heating pipes, for everyone to see. Hatfield decided to apply the same principle to his own design, revealing the inner workings of his shoe by making the air cushioning system visible. The marketing team thought the air bubble would seem like a weakness, but the Nike Air Max 1 was an instant hit when it launched in 1987. Originally, pairs sold for $75. Now they go for double that. Today, Tinker Hatfield is one of the most successful shoe designers in the world. He even created those legendary self-lacing sneakers of Back to the Future fame. Stylish and innovative, this is the design that stayed one step ahead, simply by being turned inside out.
London, it's easy to recognise. But look closely at a map. In the very centre, there's a 1 square mile cutout. This is the City of London, which lives in a city named London. The city has its own mayor, laws, and police force. In fact, it behaves more like a separate country within the United Kingdom. This is because the city's been around for much longer than the UK. It was built by the Romans and has remained semi-autonomous ever since. To embody its fiery independence, the city's emblem is a dragon, not a bad choice. You'll spot these statues. They guard the boundary of the square mile. Nowadays, the city's arguably the financial capital of the world. And London is the world's biggest foreign exchange market. But the city has a tiny residential population. Every weekday, workers flood into the banks, law firms and offices which fill the square mile. But it's not all work. This is 1 p.m. You might say no surprise here, city workers having a drink, but attitudes are changing. The legendary long lunch at the pub is now seen as a bit of a macho relic. In 2017, Lloyd's of London, the legendary insurance market, told its employees the party's over, no more drinks during office hours. But as you can see, not everyone got the memo. Because here's the rub of it, the city had a bit of a reputation. When the after-work crowd go home, the place becomes a ghost town. But that's changing, and leading the way are some high-flying dining spots. Sitting on top of the Heron Tower is the Duck and Waffle. It offers 24/7 service with a hell of a view. This is about as refined as a 24-hour Waffle House gets. But the most talked about new guest, who's reinventing the city's reputation, is called the Ned. Over £500 million has been spent turning this old bank into a private members club and hotel. With 8 restaurants in the lobby and a bar that stays open till 4 a.m, the Ned's injected some late-night atmosphere into the city. This is, after all, the oldest part of London, and following an injection of fun and flavour, it's throwing down a challenge to the rest of the city, shaking off its stuffy reputation.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven Cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker, so when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. Take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
design of this little trees car freshener goes way back to 1952 in Watertown, New York, and an unhappy milkman who was complaining to one of his customers about the bad smell of spoiled milk. Lucky for him, he was talking to Julius Salmon, a Jewish chemist who'd fled from Nazi Germany and spent time living in the forests of Canada studying the aroma of alpine trees. After his chance encounter with the milkman, Salmon started to create paper soaked in natural pine oil. A string was also attached to stop people getting the perfume all over their hands. The freshener was originally in the shape of a buxom pinup girl, but Salmon changed his design to the pine tree we know today. This allowed the cellophane wrapper to be rolled down slowly, so the fragrance would last that little bit longer. As the automotive industry took off, so did little trees, filling the air with classics like black ice, royal pine, vanilla aroma, and of course, new car scent. Fragrant and affordable, this is the design that brings you the heady aroma of a Canadian woodland, whether you're in a milk cart or a taxi cab. The design of this bottle started in Terre Haute, Indiana in 1915. At the time, Coca-Cola was being sold at soda fountains, or in a glass bottle called a Hutchinson. But this simple, straight-sided bottle was easy to copy, and imitations were flooding the market. The solution? A national contest for a new bottle that would make Coca-Cola stand out, even if the bottle were broken or you touched it in the dark. The Root Glass Company got to work on their competition entry, looking up the word Coca in the encyclopedia, and coming across an illustration for a cocoa pod. The curvy, ridge shape appealed to the team who used it as the basis for their winning design. The first bottles hit the shelves just a year later, with the added touch of the glass being colored German green, later changed to Georgia green, in honor of the Coca-Cola Company's home state. Sleek and iconic, this is the design that's flaunted its curves to become the trademark of the most popular drink in the world.
Been open since 1982, which is a long time, especially for a bank in this day and age when it can be difficult to even, survive a crisis. So many of them go away. Tell us about, what a black bank is. It's African American owned in the sense that it's depositors.
Yep. So we are black owned, and as we say, we are unapologetically black. We used to see ourselves as a community bank that happened to be black owned, but really now our strategy, and has been for about the past 5 years, to really focus on the fact that we are black owned, because our community really needs someone to speak in an authentic voice about issues that are confronting our community. Maybe about 5 years ago, we started focusing on being black owned, and since then there has been this movement, this Bank Black movement, what it's really trying to do is to get the black community to use its $1.2 trillion to both deposit in black banks and to use it to really invest in black businesses and to start doing business with each other so that we could grow the economy in our community.
How has the way that people think about black economic empowerment changed over the years?
So for us, it has changed drastically, really through the use of technology. Not only are we located in Boston, Miami, and LA, we're also the first black internet bank or online bank. And so people can open up an account with us from anywhere in the country. And we have customers here in New York, as well as in Utah and in Denver. And, you know, I could name cities across the country where we have customers. And so part of it is that we are now, as a community, connected through the internet. And that has been a drastic change in terms of how black people have really viewed themselves and viewed the opportunity to bank black and to buy black and to do business
Now,
with
are
each
your
other.
standards different when it comes to, say, lending and when it comes to giving out credit cards? It would seem that that would be one way of maybe helping a community that traditionally has had a harder time getting loans.
Yep. So we do offer services that other large banks do not. As an example, about 30% of our community has a check systems record, which means that they can't open up a bank account somewhere else. And we offer a second chance checking account, so to give them another opportunity to open up an account. Or we have a secured credit card to help people rebuild their credit. So there are products that we offer that are really tailored to the needs of our community. But there's also the other side of it that a lot of people don't want to talk about. The FDIC does a study every year, and it showed that for national banks, only 1% of their lending goes to the black community.
Right.
So we represent 14% of the population, but only 1% of their lending.
Which is funny because, you know, buying houses and buying big things that you need a lot of loans for is something that's traditionally been sort of sold to the black community in a very strong way.
Yes, and it's really an opportunity to build wealth, but we're not able to get the loans. Whereas when they looked at black banks, 67% of our lending goes to the black community. So there is a huge difference in terms of who is serving the black community for financial services.
So when you're trying to get more interest around, you said the use of technology played a crucial part. How much of it is driven by black millennials?
Yeah, a lot of it. It's sort of interesting because they've had recently sort of studies that have been done about how black millennials and millennials in general are using technology and using social media. You know, we're very big in social media, which a lot of banks have really shied away from because that's the way to get the word out to millennials. And millennials, you know, if you think about it, I'm a baby boomer. And the technology that really came out for us was really related to spending. I mean, it's probably hard for a lot of your audience to remember when ATMs didn't exist. Remember, ATMs were, you know, sort of created in our lifetime. And debit cards, I mean, so there are a lot of things that really helped us more conveniently spend money. Now there's technology to help people save money. And that's what millennials are doing. They are actually using technology to save money, to invest, and to recognize that they need to make their money work for them.
Terry, what is the one or two things that people come into you, because I presume you meet clients and you meet customers all the time, and say, this is a problem for us. It's not a problem in the economy at large. It is a problem. Help me.
Mm-hmm. Well, the basic thing is that the black community really did not feel that banks were for them. Like, we have people that come to us and say, this is the first time I've been excited about banking, like, period. Like, forget what we could do with a bank, but just even be excited to feel welcomed. So that's the number one thing, is that people are starting to say, hey, banking is for me. And they walk into a branch and say, I've never been in a bank before. They could be 50, 60 years old. They're like, I've never been in a bank before. So that's number one. The second is really thinking of banking as being not just a place that you deposit your money and don't think about, but to recognize that your deposit has power. There's certain social justice movements that we've gotten involved in, whether it's Black Lives Matter, whether it's Black Money Matters. I mean, we have expressed our voice that these things are important. And so where consumers are looking, and black consumers are looking at us and saying, my money matters. The fact that I'm putting it into whether it's a local credit union or a local community bank or a black bank does make a difference. And so the combining of your money and your deposit, specifically in social justice, is where the millennials are coming from.
Of the many satisfying moments in the recent Winter Olympics, it's hard to top the U.S. women's hockey team defeating Canada in a shootout and winning the gold medal. That victory is helping the National Women's Hockey League, the first paid women's pro hockey league, shine a light on the sport and inspire the next generation of female athletes. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Danny Ryland, founder and commissioner of the NWHL. And I began by asking Danny about increased demand for women's hockey following the historic win by Team USA.
I mean, it was just an amazing experience just to see those women win gold. I mean, ever since Maddie Rooney made that last save in the shootout, I mean, our players have been walking taller. There's been a great buzz around the women's game, and anytime you can have, that type of TV rating, parlayed with a gold medal, I mean, just the exposure that's brought our game has been unbelievable.
Yeah, the buzz it's generated is really something else. Has sponsorship gotten easier because of it? And I wonder whether individual players, some of the stars from Team USA, will be able to get individual sponsorship deals that will then make it easier for the league to strike these deals.
Of course. I mean, anytime there's international exposure, the conversations become a lot easier with sponsors. They know about the women's game. They know some of the stars in the game, and it just kind of makes the barrier to entry a little easier because we're not introducing them to a new sport. They're already aware. So it has made our lives a little bit easier, and we expect it to continue to go in a positive direction.
Now, there's been a lot of changes since you founded the league in 2015. Among them is that 2 of your clubs now have the backing and the resources of NHL clubs. And I'm talking here about the Riveters, which formed a partnership with the New Jersey Devils, and the Buffalo Sabres owner bought the Buttes in Buffalo as well. Does that create imbalance with the other 2 teams that don't have that backing?
No, I think it actually helps us raise the bar across the league. Obviously we want our teams in the hands of the best owners and operators, and the NHL clubs do it best. So I think it's a rally cry to the other clubs to say, like, all right, let's get another deal done. So we've definitely hit our stride this upcoming season. It's an interesting phase of the business that we're entering into.
Yeah. So the goal is to then get those other 2 franchises to get owners as well.
Yes. I mean, the uptick that we've seen in the 2 markets that have the relationship with the NHL clubs has been noteworthy, and so if we can replicate that and kind of come up with the perfect blueprint, not only with our current clubs but potential expansion markets as well.
All right. Now, under your original plan, NWHL offered contracts of up to $26,000 a year. About 6 weeks into last season, you unexpectedly had to cut salaries by 40 to 50% to preserve the league's future. What's been the effect on player retention?
The players have actually been amazing. They understood the change. They know that we are a startup business and that we do whatever we can for them. And they were our greatest ambassadors during that hard moment. And it was definitely difficult. It was the hardest decision that I had to make as a commissioner. But the way that they reacted, the way that they continued to be great ambassadors for the game, really spoke highly of them. And we retained almost all of our players. And then this year, we've seen a great uptick in the game as well.
What's the path forward to getting salaries back to the levels they were at?
Yeah, it's all about scale. We need to scale the business where the sports business really scales, and that's on the sponsorship side and the media side. So having the Olympics really factor in that over 3 million viewers, having our All-Star game generate over 500,000 viewers on our Twitter Game of the Week. I mean, those are really the areas that really change the business. And coming with that comes an opportunity for more sponsors. And obviously, a $150,000 sponsorship is the same as selling 10,000 tickets in Buffalo. So it's really what changes the business.
That's a great way to compare it. Dunkin' Donuts was one of your first sponsors, in fact, the first. Additional sponsors didn't necessarily follow suit. Why do you think that was?
They actually signed on the second month of our very first season. So they are incredibly progressive in their thinking, and they understand that this is an opportunity. Before the Olympics, girls hockey was the second fastest growing sport in the United States, and that's not going to slow down anytime soon. And so we think that our time is now, and the sponsors are going to start to step up. And when we can show the return on investment that Dunkin' has had from the 3 years they've been with us, I think it's going to be easier for more sponsors to follow.
All right, well, let's talk about broadcasting. You stream games live on your website, I know. You also have partnered with Cheddar on Sling TV, Amazon, Twitter, and Facebook Live. What kind of interest, if any, have you seen from the traditional broadcasters?
We've seen a little bit as far as highlights are concerned, but being able to broadcast our games on a linear broadcast has been a challenge. So I think as we continue to prove our product, obviously the Olympics and the viewership they saw is going to help us as well. But it kind of starts with starts with one. And so we were very fortunate to have the distribution deal with Twitter this season and covering our game of the week, and to really show them that these are the fans tuning in. This is a brand of hockey that hockey fans enjoy watching, and the more data that we can collect, the easier those conversations will become.
And the other big thing that happened over the last couple of years was that the U.S. women's national team won a big wage battle with USA Hockey. What kind of effect did that have on the NWHL? I know you supported them, but did that have a material effect on you?
Not a material effect, but the more that women's hockey can be in the headlines, and the more that these women are empowered to stand up for themselves and to get that equality, it's great for not only women's hockey, but for women's sports. So I think it had a direct impact because of that. And we were there to support them, and we always plan to do that.
And that was my conversation with Danny Ryland. She is commissioner of the National Women's Hockey League. In the fight for gender equality, there are new warriors in the halls of U.S. business schools, men. The nonprofit group Forte Foundation has been training male business students to become part of its Men as Allies program. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Elisa Sangster. She is executive director of Forte, to talk about the organization's efforts to launch women into careers in business.
The business schools, each of them have established in a little bit of a different way, but they all found kind of the structure that worked for them. So the men work with the women's student group to establish this organization, and we've provided them with a toolkit. So really a step-by-step process of how to get this effectively started on your campus. They have a whole curriculum of conversations that they do in terms of programming. Some of them go out to hike a mountain and sit down and talk about these issues at the top of the mountain. Some of them go go and have a small group dinner where they can actually have one-on-one guided conversations with questions that they can talk about. So it just depends on the group, and they try to do a variety of programming so that they can engage men and women who are on various ends of the spectrum into this conversation.
Based on what you've seen through your years at the Forte Foundation, do men and women have different ideas about how men can best serve as allies to women in business school?
It's a good question, and some of the things that we heard from the women, especially women who were resistant to this, were we don't need white knights, and so they didn't like the white knighting piece. They wanted the men to come in and join them side by side, but they didn't need them to come in and save the day. And for some of these organizations, that tension caused a little bit of a problem getting the organization started. But the good thing is they worked through it, they reapproached, and they came up with a better way to do it. And the men were open and interested in making these things successful, and that was helpful, I think.
In terms of numbers, what have you seen? Are we talking about 100% participation by the men, or is there a threshold at which you know that this has legs?
So I think what we're seeing is that the chapters have grown. So we've gone from a handful of chapters, 5 to 6, up to 25 right now out of our 52 partner business schools. But on each campus, they take a little bit of a different approach. Some of them are trying to get 100% of the men to sign a pledge, and then others are really looking at the population, 20, 30, 40%, who are interested in diving deep into this conversation and really making an impact in that way. So it's different depending on the campus.
Now, this initiative was introduced in 2016. Obviously, a lot has happened since 2016. What have you learned from the whole process?
That I think it's a really important conversation to be having early, and I think to start in a positive place where it's men saying we want to be supportive instead of men feeling attacked and possibly isolated from the conversation. I think what Male Allies does is give them the entree into the conversation that they need, and we do see across that spectrum that men are often interested in supporting but unsure where to start and what kind of things they should be saying and doing to be those male allies. And so that's why I think it's important to train them as early as possible.
This sounds very much like a product of its time. It can only happen at this period of time with this group of people, the millennials. To what extent do you see the same level of enthusiasm from people who are from a different demographic, an older generation, for instance?
Right. I think that they're sensitive and interested in it, and especially because many of those people are in leadership. They're hearing about it. How can we as an organization address this? How can we develop something to share within our entire corporation? But I think what's different about this is that these are young leaders who are moving into an organization, and they're saying very actively, we want a voice in this, and we have something to say, and we want you to listen. So top down is good, but it's not good enough. We want to also see bottom up and side to side conversations.
They see themselves as agents of this process.
Absolutely, absolutely.
What is the next step then? Because eventually these business school men and women will graduate, they will go into jobs or start their own companies. How do you maintain your influence from that point on?
Well, it's interesting because we have seen 3 or 4 years of graduates, and they are starting to reach back to us, and they've said, hey, I'm experiencing X, Y, and Z in the workplace, and I really think what we did in business school could easily apply in the corporate world. So over the last year, we've been collecting data from them, kind of their own experiences. We've done additional research, and we've also been talking to companies, especially if they have some kind of grassroots movement. And I do think that business school, this program is unique to business school, and I don't think you're seeing it as pervasively within a company or in the corporate structure. So these students are still taking the grassroots approach, and they're saying we think that this is the most effective way to do it. Training is important, and definitely we want our leaders to be bought in, but we think that having that conversation early is what prepares you to be the best business leader.
What kinds of companies are participants, are willing participants here?
It's companies from a lot of different industries. We've seen companies in tech, in consumer packaged goods, in finance, all across the board. There are companies involved in this. Again, it's more the men who are reaching out to us in those industries. It's not necessarily the companies saying, sign us up.
That was my conversation with Elisa Sangster. She's Executive Director of the Forte Foundation. To the Me Too movement, Hollywood is in self-reflection mode about creating a safer work environment for women. There's now a website aggregating reviews from exclusively female critics. Cherry Picks is taking on male-dominated opinion sites like Rotten Tomatoes. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I sat down with the founder of Cherry Picks, Miranda Bailey, and I began by asking what specific need her business fulfills.
We're kind of cherry picking the female critical voice out of film, television, video games, basically anywhere where there's art criticism and media criticism, so we can have a platform to see what women think about it. In terms of women, it's very complicated because there's not that many of them on Rotten Tomatoes compared to the men. I mean, it's less than a quarter. So in order for us to us being females, to have a voice and know what females think about something, it's really hard when there's an overwhelmingly male, voice shouting at you or saying, this is how it should be.
What are the financial consequences of that gender imbalance among film critics? How does it make its way through the industry?
Well, I don't really know about financial, situation. For me, it's about the consumer. I mean, in Hollywood, we've been talking about we need more women behind the camera, we need more women's stories, more women writers, more women actors, everything like that. And I am a film producer and actor and director, and it's really easy to say we need it, and it's a lot harder to make it happen because at the end of the day, Hollywood follows the consumers. And if the consumers are being told what is worth their money by a certain group of people that are, kind of narrow, then it's not going to open up. And I felt like, well, maybe if we can open up the critical voice, which is, the gatekeepers essentially telling people what they should buy, what's worth their money, and women actually like these stories and like these filmmakers, then I thought that would be a faster way to get more women behind the camera and more women's stories told.
How are you funding this website? You mentioned it's going to be an aggregator of reviews, but are you going to be advertising supported, subscription driven in any way?
Yes, I mean, we're funded for the next, 3 years about right now by my production company. And, we will be finding partners once we kind of, get our our voice and our full creative image out there. But yes, I mean, we plan on doing advertising. We plan on doing partnerships with film theaters so that we can, link to buy tickets online. So like if you read a review about The Zookeeper's Wife, for instance, and you really like it, you can go right there and buy it.
It's an interesting time to be launching this because of the Me Too movement across Hollywood, across media overall. How do you intend for this site to help change the culture in movie making?
Oh, well, I mean, the Me Too movement and the Time's Up are two very different movements. I mean, they're both female-centric, but, at the end of the day, we're about, being recognized and respected. And so I'm grateful for those movements. I think it's kind of wonderful that that's happening right now. We've been saying this for a very long time, that we deserve to be paid equally, and not to be, sexually harassed. And, not everyone is sexually harassed, but most all women are definitely underrepresented, underpaid, and disrespected.
You are an independent film producer. As you mentioned, you're an actor, you're a director. What kind of feedback have you gotten from peers in your industry when you told them about Cherry Picks?
I have had overwhelming support from female journalists specifically, which is very exciting for me because this is kind of a new door that I'm opening and learning about. And obviously the female filmmakers that are out there are really excited by it. We're all banding together right now and supporting each other, which I think is great. I think one thing that's awesome about the Time's Up movement is that all of the women who are directing right now are not competing with each other. We're all rooting for each other. And I think that that's a big change. And I think this Cherry Picks is part of that, is us also lifting each other up and opening it up to journalism and the consumers and what the buyers, the exhibitors, the distributors, the producers, the directors, we're all together in this and we can all make a difference.
Kos Marte went from doing hard time to building hard bodies. He's the founder of Conbody, which is a prison-style boot camp class in New York City that employs former inmates as fitness instructors. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Kos to discuss how he built Conbody from the ground up.
Conbody was derived from my prison experience. I lost 70 pounds in 6 months in my prison cell after doctors told me I could probably die because of my health issues. I was extremely overweight. My cholesterol levels were through the roof. And I lost 70 pounds in 6 months, and then I helped over 20 inmates who was over 1,000 pounds combined. But I took that same programming that I was doing in the prison yard and started doing it and brought it to the streets of New York.
And you began a business, but you told me how you didn't have any startup costs and you funded this yourself. How did that work?
Yeah, I mean, I didn't have no overhead. I just went out straight to the park and started running after a woman wearing yoga pants. And I was like, hey, I got a boot camp. And I told her my story and started just attracting people to the park. I was standing on the F train, B train, making announcements. Like I was nonstop hustling and asking. And I basically took the same skills that I used while I was selling drugs and brought them out legally.
So these are transferable skills.
Exactly.
Your workout's gotten really popular. You now have your own location. Talk about what's involved here and who goes to your workout classes.
Yeah, so what we do is hire formerly incarcerated individuals to teach our fitness classes. So we train the inmates in the system, and we're working on creating a direct pipeline from the inside out. Mostly the people that come to our classes is young professional women. Actually, a lot of people are surprised, but we don't use any equipment. A lot of guys like to, go to the gym and lift 1,000 pounds. My secret sauce is that I work with what I got. So just my body weight, small amount of space, just like I did in my prison cell. And I got that prison body you've always desired.
Now, you hire former inmates, as you mentioned. You're trying to build this pipeline. What do you look for in a potential new hire? And the extent of vetting, talk about that involved in these prospective hires.
I look for people that are charismatic, and when I conduct my interviews, I conduct them like 5:30 in the morning. So if you don't show up or you come in late, too bad. So I really try to make it strict as possible in the beginning, and then I really see if I could hang out with this person, if this person could say hi and bring a smile out of my face. Not only me, but the customers that are coming through the door, and really breaking down that stereotype, because we have people coming in, who's never met anybody who's been incarcerated. What the perceived notion of somebody that's a so-called ex-con is that we're all killers and rapists and, the worst of the worst. But the truth is that we're just all human beings that committed a mistake, and we just want to adapt back to society and get a second chance.
Your real message here is about prison reform when it comes down to it. And you kind of came up with your business plan when you were in solitary confinement. You had a lot of time to think about this. You also got some help once you established your workout class after you held it in the park.
Yeah.
Talk a little bit about the organizations that allowed you to bring together some of your ideas and make it a more scalable business.
Yeah, so when I came home, I tried to take advantage of every nonprofit that you could think of in the prison reform industry. So I went to Fortune Society. From Fortune Society, went to Career Gear, and all these nonprofits were helping me and just trying to get me back on my feet. But there was one program called Defy Ventures. Defy Ventures believes that illegal entrepreneurs have the transferable skills to become legal entrepreneurs. And I did that program. It was a very intense program taught by MBA, Harvard, and Stanford professors. And you graduate and you get a MBA Baylor University certificate when you graduate from the program. So they helped me put my whole business plan together and pay my taxes, and really do it legit.
Talk a little bit about your growth plans, because you're based in the Lower East Side of New York City, but you have some pretty ambitious plans.
Yeah, so I'm in the Lower East Side, in the exact same corner where I sold drugs at, where I got in trouble at, and went back into a full circle in that neighborhood. Our growth is we want to open nine studios in the next 5 years. I just came out with my book, so Conbody. shows my whole secret sauce in that book. And then also we started this online platform that's coming out in a couple weeks where you can virtually work out with a formerly incarcerated individual. So you basically choose your favorite ex-con for $9 a month, and you get that prison body you've always desired.
Diversity is in fashion. That's according to Eva Chen, who heads up fashion partnerships at Instagram. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I sat down with Eva Chen at the monthly Cornell Tech at Bloomberg Speaker Series, and I asked Eva how exactly inclusion is showing up on the runways.
The message is you must be inclusive, and you must kind of understand that there are billions of people on this planet, and there's not one look. I think about Instagram and some of the accounts that have done so well on Instagram, and some of the models that are coming out of it, like Ashley Graham or Paloma Escolar or Halima. Like, these are women who represent beauty for a lot of different people, and that kind of cookie cutter look. There's not just one standard of beauty, it's 800 million standards of beauty. So I think that's kind of the voice. And now, you think about it, if a fashion show were to cast just one type of model or one type of woman in their runway, and it was every single model looked the same, you would hear about it on Instagram. Like, people will not take that. And I think it's amazing. I think it's powerful. I think everyone can feel represented. And for me, growing up, I remember not seeing anyone who looked like me or looked like us. It just didn't exist. And I think now, if you are a 15-year-old bookworm who, loves to read, this is like, I'm describing myself, like a bookworm who loves to read young adult fiction and drink like lemon ginger tea, it's like you can find someone else, and you can find your group of people by following the hashtag Bookstagram. You can find, like, your kind of like squad. And even if it's a digital squad, you can feel like you have other people to kind of identify with.
How is fashion able to get ahead of the curve of everyone else? Why were they able to figure this out more quickly than others?
I mean, I think in so many ways, like, fashion just kind of, it's supposed to be a little bit prescient. It's supposed to be a little bit ahead of the curve. And also you're able to push the boundaries in fashion. Like, there are runway shows where people can kind of walk backwards on the runway, or they cast real life models, real life people, which is just like people, revolutionary, like on the runway. And I think that you're able to take risks in fashion, and risks are appreciated.
Some risks don't pay off. I mean, I think of H&M and the controversy over a black child modeling a sweatshirt with the words "coolest monkey in the jungle." That obviously did not work. How is the feedback now from consumers different in the age of social media, where something like that will go viral in a bad way very quickly?
Yeah, I mean, I think that, listen, I don't know what the thinking was behind that specific moment, or behind that specific casting, but nowadays it's like, the most important thing for corporations and companies is to have representation. Make sure that your board of directors is diverse. Make sure that the people who work in the casting department and the creative teams are diverse, because you want to be able to truly represent and truly embody. It's not enough to say, we believe in diversity. You have to have diversity. And that's, I feel very fortunate at Instagram. It's like, it is a diverse team. I love seeing and hearing the different voices and opinions, and voices of dissent as well. And that's the thing with Instagram. It's like, people have opinions. You won't always agree with the opinions, but it's important that people voice their opinions, and when people see something that they think is wrong or that is wrong, like, they will speak up and speak out.
Right. Do you think fashion brands are nimble enough to respond, or it's because of something like Instagram that provides that instant loop, that feedback loop, they're able to?
I think some companies are. I think it very much depends on the infrastructure of the company, and this is like, I don't know enough about like fashion corporations and infrastructure, but like, if you have, I look at Gucci, for instance, and Gucci, they have been known to collaborate with a lot of Instagram influencers and artists, and for the most part, 99% of the time, it's amazing. And there was one season where they did there was something on the runway that was very evocative of Dapper Dan, the renowned kind of like fashion icon, and they were called out for it. And very quickly, they issued a statement saying like, you were right, and now they're collaborating with Dapper Dan and doing a whole collection together. And I think that's in part, their creative director, Alessandro, is incredibly fluent in Instagram. He's on direct messages, reaching out to illustrators, looking for fresh voices. And I think a lot of it depends on the leadership and how, I don't want to say woke, but like how kind of like tuned in they are to what the public consciousness is creating.
So in the early 1990s, you started selling soaps and essential oils on the streets of Harlem and Bed-Stuy to start Sundial Brands. How did you know back then that there would be a market for black hair and skincare products?
Yeah, well, because when we started, first of all, there was nobody producing natural products that were efficacious and that were designed to work on different hair textures and on different skin types. And so what you had was a consumer who desired to have healthier products, natural products, but had no access to anything that actually worked. And so, when you stand on the street corner, people tell you what they want, you better give it to them, otherwise it gets really cold, right? And so we started to take that feedback and started to incorporate that into the things that we were offering. And before you know it, we were selling to other vendors who were bringing feedback from their customers and clients. And so very quickly we got to understand just how underserved women of color were around their hair and their skin.
What has the explosion of the natural hair movement in the U.S. done for your business?
Yeah, as women became more and more empowered or empowering themselves, I should say, to wear their hair natural, to express themselves as freely as they wanted to around the things that were important to them, that really started to drive the adoption of natural hair. And then they actually had products in Shea Moisture that delivered on the promise of what they wanted, right? So I think the two worked hand in hand, and it really took off.
How does Sundial Brand stay authentic as you guys have grown?
Yeah, I mean, I think for us, we've built our business from day one on a model that we call community commerce. And what community commerce is that a business ought to invest in the community where it does business, right? And it ought to provide not just products to that community, but it also should take the dollars that it takes out of that community and put it back in. And so for us, that meant that the products that we produced from our supply chain in Ghana, of which there are 16,000 women that now supply Shea Moisture, who have now risen above the poverty line because of this model, also get to share in 10% of the revenue of the products that their ingredients go into, right? That then provides them with infrastructural support, warehousing, equipment, training, safety, health insurance, bank accounts. That's the core of what we do this for. And so we continue to do that.
And so in November, Unilever acquired Sundial Brands. What did that deal allow you to do now that you haven't been able to do before?
It enabled us to take, to commit to this $100 million fund. It's called the New Voices Fund for Women of Color, which now allows us to go create other entrepreneurs, or maybe not create, but invest in other entrepreneurs so that they too can have the type of economic opportunities that we've had. So as I said, it's not for one company or two companies alone to be able to compete and to survive and to sustain is not enough. We need thousands, right? So so the first thing this allows us to do is to invest there. The second thing that it allows us to do is to scale our community commerce model so that we can go from these 16,000 women to 200,000 to 300,000 women globally. And the third thing that it allows us to do is to compete globally against global corporations. We can't compete for shelf space the same way because we don't have the same resources. We can't buy the same amount of advertising on TV or in magazines or in social media. So we end up shrinking and shrinking and shrinking as more companies come in to serve us as consumers. So what we've got to do is we've got to provide capital to each other in our communities in order to compete. We've got to find ways to scale our business. Now, the way that I've done it may not be the way for everybody else, but at least it shows a path, right? And it shows that it can be done, and it shows that you can do it and be highly successful at doing it. And it also shows that once you do it, you've got to be committed to putting it back in.
In today's Walk the Talk, Bloomberg's conversation about diversity in the workforce, we're putting the spotlight on Goldman Sachs. CEO Lloyd Blankfein is reportedly planning to step down as soon as this year. Diversity will be a top priority for his heir apparent, David Solomon. Solomon recently told the Women in Corporate Leadership Initiative, quote, "You make progress, but the progress as you're looking at it day to day feels slow. And it feels slow because you're a big organization. But you know over time that will change. It's our job to change it." Joining us now to explore this topic is Bloomberg's Jordan Holman. Jordan, we know that Solomon has been pretty active on the diversity front. He did propose a number of ideas to the board not so long ago. Why aren't we seeing an increase of female representatives or executives at the senior level? Because it's not there yet.
Right. No woman has run a major Wall Street bank before. And if David Solomon does become the next CEO, that pattern will continue. So at Goldman, they are looking at increasing the number of women who come into those entry-level positions. But we're not seeing the women come out on the other side of the pipeline on those executive teams. So there is a retention issue, and they are looking at that through mentorship and sponsorship initiatives.
So how long does it take before you get sort of a critical mass of women at senior ranks? I mean, what's the sort of trajectory within Goldman to reach the upper echelons of leadership?
It definitely takes years, and you have to groom people. Goldman's a company where they want to hire internal candidates. An internal candidate becomes CEO. So that's why it's important to retain those women that they're bringing in. For example, this summer, they said that they'll have about 40%, mid 40% of women in their junior employee class. And so that's great, but there's only 2 women on their executive team. So now you have to, with this generation, groom them, promote them, have opportunities for them to want to stay on Wall Street.
And that takes time. I think about how Dina Powell, who was once at Goldman Sachs, went to work for the Trump White House, has come back. And there was some tension over her promotion when she returned because she was added to the management committee when her background is not in a profit-generating business.
Right. Her background's in government and philanthropy. And when you're looking for the next CEO, you're looking for those people who've been in positions of profit and loss. And she's not in that. So then when you look at the pool of women who are in that, it gets smaller and smaller. So then when it's time to select your CEO, you have nowhere to turn.
How does Goldman compare to its peers with this?
So Goldman's not alone when it comes to female representation. Citigroup and JP Morgan also have less than a quarter of women on their executive teams. So it's a conversation that needs to happen across all the banks of how do you get your first female CEO of a large bank.
You recently talked with Goldman Sachs' former HR head, Edith Cooper, who spoke about the bank's efforts to increase diversity, women as well as minorities. What did you learn from her?
So Edith Cooper spoke on a panel last week, and she said that Goldman is looking at the data. They're really trying to be data-driven about their diversity initiatives. So if the data's not saying that they're making progress and change, like Solomon said earlier, it looks slow, then they're going to switch it up. They're going to try new initiatives.
Fixed income mutual funds run by women are outperforming funds run by men. So you would think that the number of female managers would be rising, but you'd be wrong. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I want to bring in Bloomberg's Liz McCormick, who's been crunching the numbers, and the numbers are kind of troubling here. Going back 15 years, Morningstar has found that women-run fixed income funds outperform by a meaningful amount.
Right. I mean, it's very interesting. They said, let's run the numbers and see, is there a performance reason why women are only 10% of the whole business? And they found no. I mean, on fixed income, women slightly outperformed. Even mixed gender teams did better. And on equities, it was fairly close. Women slightly underperformed. So the numbers didn't back it up. They said there's no performance reason why women shouldn't be rising as the number of fund managers.
And in fact, the number of women-run fixed income funds in the U.S. has dropped precipitously. It's now, what, 14 in 2017?
Right. Those exclusively run by women. There's only 14. As of September 2017, that's all there was.
In 2004, it was 47.
Yeah, so it was a big drop, you know, so it doesn't kind of make sense, you know.
So you talk to different people. What do they blame it on, or what do they attribute it to, rather?
Yeah, it's interesting. You know, I spoke to a lot of the leading fund managers who broke through and said, how'd you do it? What are the problems? A lot of them said, number one, it's very tough, because we weren't always welcomed in the beginning, and you don't start as a fund manager. You have to rise to that level, so it's a long haul. And some say by the time you've fought for 30 years or so, some are like leaving and they're had enough. And others are saying young women don't know enough about it. So that's why these organizations like Girls Who Invest are trying to, you know, educate college women. Hey, this is a great field for you, and you can perform.
Absolutely. Misconceptions also abound here, and I know this is something that Girls Who Invest is trying to fight as well. The idea that you have to be super quanti to run a fund. It's something that doesn't get communicated very well.
Right, exactly. I think some women think, well, maybe I could, you know, go into sales or banking or something in general, but to run a fund, you have to be just wicked smart and have to be great in math. And of course, those are great skills, but that's not all it requires. And women, it's about managing risk. Like Ann Walsh of Guggenheim said, you know, women are very savvy at managing risk, and that's especially in bonds. That's a big deal, you know.
What was her story? Because she started off on the state pension side, right?
Right. She's amazing. I mean, I said, is this right, this list of all your achievements? Yeah, she started as an accounting degree, said I just happened to go to a pension fund, and then I learned about portfolio management, and then went on to just really work hard. MBA, CFA, law degree, you name it. She had to really stack the decks, but, you know, she achieved.
All the credentials are there, and she got her break.
Yep, for sure.
early 1990s, Liberian native Richelieu Dennis co-founded Sundial Brands with the goal of creating natural hair and beauty products for consumers of color. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, Jordan Holman sat down with Richelieu to talk about the rise of Sundial.
When we started, first of all, there was nobody producing natural products that were efficacious and that were designed to work on different hair textures and on different skin types. And so what you had was a consumer who desired to have healthier products, natural products, but had no access to anything that actually worked. And so, when you stand on the street corner, people tell you what they want, you better give it to them, otherwise it gets really cold, right? And so we started to take that feedback and started to incorporate that into the things that we were offering. And before you know it, we were selling to other vendors who were bringing feedback from their customers and clients. And so very quickly we got to understand just how underserved women of color were around their hair and their skin.
What has the explosion of the natural hair movement in the U.S. done for your business?
Yeah, as women became more and more empowered or empowering themselves, I should say, to wear their hair natural, to express themselves as freely as they wanted to around the things that were important to them, that really started to drive the adoption of natural hair. And then they actually had products in Shea Moisture that delivered on the promise of what they wanted, right? So I think the two worked hand in hand, and it really took off.
And that was Bloomberg's Jordan Holman speaking with Sundial Brands co-founder Richelieu Dennis. You can get the full interview on Bloomberg.com.
Load-Me stands for Locate, Target, and Message. Load-Me helps advertisers collect and organize their consumer data. So if you can imagine that customers engage on the phone, on the web, in a store, through a coupon, we help collect all of that, attach it to a profile, and activate it. It's the big data story. When I started the company in 2006, I saw this unbelievable opportunity around user-generated content. It changed the paradigm for all advertisers. There had to be a platform to protect the brand and get a defined result, which is a sale. That is the genesis of Load-Me. My first year in business, we landed 9 customers on a proof of concept. I then went to venture capitalists and told them the story. And over time, I was able to raise $60 million. I woke up one day in 2011, I had a board meeting. I called our board together, I told them the trends and the data points I was seeing, and we made a decision to cut the company in half and walk away from a $30 million revenue line of business. We took the company and made a huge pivot. We went from about 100 employees down to 50. There was some overlap of customers, but most of the customers were net new customers that we had to go win around a different line of business. We went from a media business that was charging on a campaign basis to a software as a service business that was charging a monthly fee to manage data. One of the key things that happened during the process was what once was just a desktop experience, meaning your computer, suddenly became a mobile device, a television, an iPad. And that is why we bought a company called Admobius in 2012, simply focused on what was called the device problem. Cross-device. In a privacy-compliant way, we were able to stitch together profiles and audiences no matter how they were engaging with the brand. We've had about 500% growth in customers since 2014. We've 10x'd our employee base over the past 5 years. We're profitable. Developing profitability in a technology company is something I'm super proud of. Over the next 5 years, I would like to be a very large public enterprise. Almost every device and almost everything we're doing is connected to the internet. Microwaves, refrigerators, automobiles. There's information that's thrown off from that device connected to that consumer. I think there's an opportunity for a public company who is only focused on data, data solutions, and activating customer data. In a world where data is everywhere, we help our customers figure out what it all means. And that's the future of Load-Me.
The idea for Full Lane came about in 2009 when I was making a personal shift to a healthier lifestyle generally. And I realized when I was looking into nutrition and fitness that all of these beauty products actually contained a lot of toxins. I realized there was a real opportunity for a clean beauty retail store with all vetted products for safety and performance. Our entire goal is to shift the mindset around the products you apply to your skin. I needed to learn a lot about business and about the beauty industry. I worked on a lavender farm, I worked for a skincare developer, I got a quick MBA at Babson where I focused on the business plan the entire time. In 2013, we opened doors to our first store. I was in there every single day talking to customers, figuring out what this needed to be. I raised a small angel round of $750,000. That lasted us almost 3 years. All the way through to 2016, I was really focused on building a brick and mortar first business. At the same time, there was so much more going on in beauty online than there ever had been. You know, content had become so critical. We decided to make a huge shift in 2016 and change to a digital first business. We decided that digital first was really going to be the only way that we could get the content out there and we could grow fast enough to be able to share our, very unique level of expertise. So we raised a round of $3 million to do that. We needed to build a digital first team. We needed to build a new flexible tech stack. We're very lucky to be in Boston, to be surrounded by a ton of really awesome engineers and folks that are super passionate about mission-driven business as well. We spent a year and a half building it out, figuring out how Full Lane should exist online. So it'll be between 70 to 80% online by the end of this year. Despite building a digital first business, you can never truly replicate our in-store experience online. We have 2 brick and mortar stores right now, both in Boston. We'll be opening 4 this year. And if everything goes well, we'll open an additional 10 in 2019. We're going to continue growing content and education online in a huge, huge way. I think the real secret sauce to Full Lane is we are a highly curated portfolio. Since starting the business, we've tested between 800 to 900 brands. We have 75 brands in the store right now. It's not easy to get on our shelves. We don't carry any full brand portfolios. We carry what the best products are by the brand. It's helping in the repeat rates, it's helping in retention. We're now becoming known as the place to really truly start your clean beauty journey.
mission at Food 52 is to inspire people to eat thoughtfully and live joyfully. We are a comprehensive resource for kitchen and home enthusiasts, and that means that we offer both content and commerce, and then community is a tie that holds it all together. My co-founder Amanda and I both come from traditional print media backgrounds. We were editors and writers. In 2008, 2009, we saw this opportunity to create a brand around kitchen and home that lived online. We went out and got a book deal. We got a $100,000 advance, and we actually used that advance to pay for the building of the initial website. In 2009, when we launched, we started really with recipes. Then in 2010, we raised an angel round, a seed round, of $750,000, which we used to invest in building out our own e-commerce platform. E-commerce represents about 60% of our top line revenue, and ad sales is the majority of the rest, with a very small bit being cookbook sales. The majority of our advertising is native advertising and branded content. The events are also a key part of all of our lines of business. We do a lot of events with brands on the ad sales side, and then we have our own events on the commerce side, often pop-ups where we're showcasing our products, which you can typically only buy online. Last year, during Cyber Weekend, we had an outage where the company that calculates our sales tax was down for over 12 hours. So we had just a total backup. What we decided to do was to remove the sales tax functionality completely from the checkout process so that orders could get through, and turn it to our advantage by actually making it a promotion. And we followed up with an email the next day, and we said to everyone, we will cover the sales tax through the rest of this weekend. When you have a community that you really are talking so directly with all the time, it enables us to have that sort of direct conversation with people via email, via the site. This is what we're going to do. We're going to turn it around to your advantage because you're that important to us. Right now, we are touching 12 million people on a monthly basis. Our unique visitor growth has been 65% over the past year. We're talking to Amazon Alexa about a partnership. Something we talk about all the time is, what does a Food 52 presence look like offline, a permanent brick and mortar presence? We're very close to profitability, and it is really one of our key focuses for the next 18 months is to become a sustainable business.
Sweetgreen, we make every single thing from scratch in store every day. The three of us were just, you know, what if we opened this restaurant? It was just solving a problem that we had in our own life. This problem of wanting to eat something that was healthy, affordable, convenient, and really stood for something that we believed in. We started the company by going out to anyone who we could ask, and we raised about $300,000. 40 people contributed to that very first restaurant. That means the average check was somewhere between $5,000 and $10,000. The place we found to open was tiny. And what that did was it really forced us to simplify everything. And that philosophy has really stuck with us throughout the whole history of the company. It wasn't that sales took off in a crazy way right away, but it was like the people who knew about us loved us. Very soon after we opened the first one, we started exploring the idea of a second and a third one. Our first 7 restaurants, we stayed in the DC area. We had these huge ambitions, but we knew we had to get things right before we scaled it. We've had to raise a lot of capital along the way because we build restaurants, but we never really took on any sort of institutional funding or any big investors. It was about 4 years ago, one of our customers and friends approached us about investing a lot more money. It was a guy named Steve Case. He really believed in our mission. That kind of funding allowed us to invest in people, invest in the community, invest in the systems and infrastructure, allowed us to build a brand. We invested in mobile technology and also rebuilt our restaurants in a responsive way. You can pick up your phone or go online and within just a few clicks, order it, have it on a shelf ready, and come pick it up and be out of there. That was really hard. It was more than just building an app. Everything had to be redone. The way we operate, our kitchen systems, our prep, everything we did had to be rethought because all of a sudden it went from like one restaurant, one engine to 2. It took us about 2 years to build that technology. You know, I think sometimes the easy way is not the right way. Instead of resisting it, embrace it and figure out a way to do it the right way, not just the cheap or the easy way. Today we're open across the country in 8 cities. So we're in DC, Philadelphia, Baltimore, New York, Boston, Chicago, LA, and the Bay Area. In 2017, we'll end the year with 85 restaurants. For the next 10 years, we're focused on not only just building restaurants, but building technology that can make it easier for customers to interact and eat healthy. We always say we want to meet customers where they are.
The idea for Swell really was I wanted to create a better looking water bottle that would convert people to actually carrying a water bottle everywhere that they went to stop using those plastic water bottles. I started Swell with my own personal savings. I invested $30,000. I worked with a team of industrial engineers. The Swell bottle is triple-walled stainless steel with a layer of copper on the inside. It's almost indestructible. The first year when I started Swell, I went to 17 trade shows myself. I stood in a lot of booths and I talked to a lot of customers. They would tell me, could you make it in this other color? Or could you make it in a bigger size? Because we would like to take wine to the park. Really, that first year was just a learning lab. It's been a real wild ride. We went from 3 million in sales to 10 to 50, 50 to 100, really fast. We are now in 65 countries. One of the challenges that we faced is we outgrew our office. We outgrew our systems. We were running this company at $100 million last year on spreadsheets. We outgrew our website. It mostly kept up unless somebody famous tweeted about us and then everything, came down. For me as a CEO, it was really hard to turn my attention inward. It's been hard for me to not take every marketing opportunity, every sales opportunity, every innovation opportunity. We had to put a lot of things on pause while we built the infrastructure. We're building up the leadership team, we're moving the office, we're moving the warehouse, we're moving the website. We can be a billion-dollar company because we've got the systems. Last year in 2016, I had the idea to launch a new line for Swell. It's called Sip by Swell. We originally launched in Target stores nationwide. It's a little bit less expensive. It was part of my idea that creates something new for a different type of customer. Our customers love to collect them. We found that the average customer that has a Swell at home has 5.5 bottles at home. Still today, we're a self-funded company and we don't have any outside investors. I don't have a board. I don't have any metrics. I don't have anyone telling me I need to hit any numbers. We might not always be privately owned. We don't necessarily need the capital, but I'm always interested in potential advice and expertise. How could we potentially partner with someone that can help us grow bigger, faster, stronger? I'm not saying that anything's coming, but you never know. I still see people with plastic water bottles. However, I have to say, I think the balance of seeing the plastic versus seeing Swells is starting to change. We still have some education to do, but I'm feeling pretty good about the progress.
Gotham Greens is a commercial-scale urban farming company. We develop and operate high-tech greenhouse facilities for fresh vegetable production in cities. I was working in the field of sustainability and environmental engineering and became fascinated with the technology that was available to be able to grow crops using a small fraction of the resources compared to conventional farming. And at the same time, I really started to recognize the growing trend in the marketplace toward consumers wanting more local and regionally sourced food. So that's really when the light bulb moment went off. We cobbled together some funding and built a 15,000 square foot rooftop greenhouse in the Greenpoint neighborhood of Brooklyn in 2011. We started pitching supermarket chains, restaurants, we started inviting chefs into the greenhouse facility, and within 3 months we were completely sold out of the produce. And that's when we realized that we were really onto something and we should probably expand. And then a really compelling partnership opportunity came along with Whole Foods Market, which at the time was one of our largest customers, and we crafted an idea to actually design and build a commercial scale greenhouse into the roofs of one of their new supermarkets in Brooklyn, New York. That was almost double the size of the first one and provided our brand with a lot of visibility. Lo and behold, within a few short months of opening that second greenhouse facility, we were yet again sold out of the produce. So we started looking at Chicago, which is also a city with a thriving food culture and a consumer base that's increasingly demanding high quality fresh produce, and that facility is our largest until date, which is about 80,000 square feet or 2 acres. That produces the equivalent of about 50 acres of conventional field farming. This form of farming, which is known as controlled environment agriculture, is really a combination of horticultural science as well as environmental engineering. It was a challenge to find people with this very unique skill set. We conceived of an idea to establish an in-house training program that we now call Gotham Greens University. So we're able to take young graduates out of university or high school vocational programs focused on science and biology and train them to really design these facilities and operate them. Our company has built 4 greenhouse facilities across 2 cities. We have about 160 employees. We've experienced about a 20x growth rate since inception. In our first year of operations, we grew about 500,000 heads of lettuce and leafy greens. And last year, we grew over 20 million heads of lettuce and leafy greens. I believe the future will have us expanding to other cities across the United States, expanding into new products, new product development. Our motto is to be able to harvest and deliver within 24 hours to be able to provide consumers with the freshest possible product and the best tasting product.
Gemmi is a new luxury brand that's providing the customer with the highest quality Italian shoes at prices that have never been historically possible until now. We looked at the luxury marketplace, and there were so many qualities about luxury that were great, but there were some qualities that needed some real reinvention. The incumbents certainly were not reinventing. Shoes happened to be a category that we fell in love with because we love obsession. We want to be a business that occupies a spot, a place in the customer's mind all the time. Shoes create that unique obsession. We think that you've got to be newsworthy. You've got to be different. You've got to have a story to tell. Our consumer knows there's must-see TV every Monday, and it's not about markdowns, it's not about private sales, it's about great new product. We actually don't release that many more products than other traditional retailers do. We just don't do it all at once. The way we describe our company to the consumer is we're old world meets new world. We identified very early on in the business creation a team in Italy that I'd had some history with that we could in essence acqui-hire. It was a group in Italy, in Florence, that had been in the shoe manufacturing business for generations. There was a whole bunch of challenges in taking the old, historical Italian shoe manufacturing industry and putting this new engine on top of it. Unlike most fashion brands that produce things 4 times a year where you have these big spikes, we're providing them with this constant demand, keeping their factories moving all of the time. We had to get them to start producing products at the pace that we wanted them produced. The only way to solve that was to learn. They've done a pretty good job of learning through our data. They've done a pretty good job of learning through our forecasting what opportunities they can receive by moving faster than they've ever moved before. They've been pretty open to listening about ways to improve their demand forecasting and ways to improve their speed of production, but they're not so open to listening to better ways to make shoes, that's for sure. Probably rightly so. We opened our first store in Soho. 80% of those customers who bought in the store first buy their second purchase online. If you're buying things with the frequency that our consumers buying them, the luxury of multi-channel drives to their purchase pattern. 50% of our buyers come back and buy a second time. Once they buy a second time, on average, they average 4 purchases within a year. We're also seeing consistent 100% growth year over year in total sales and margin continuing to improve in each of those years. So the goal is not go as fast as you can go and grow as fast as you can grow. The goal is with really good controlled growth, ensure that you can double your business for a number of years.
Box is an online warehouse club. We cut out the membership fees and we deliver it right to you, generally in 2 days or less with free shipping. I grew up in the suburbs of tropical New Jersey, and then moving into Manhattan later in life, I didn't have a car to get to a warehouse club. And so I thought, how many other folks around the country had that similar problem? And so actually moved back into the burbs to start the company in a small 2-car garage in Central Jersey, tape gun in hand. We went after and tried to solve that problem.
Brit & Co. is a new media company that largely reaches millennial women and aims to inspire, inform, and empower them to be more creative. My past is largely out of tech companies. I worked at Google and Apple, and I started realizing the world of digital media was becoming a big trend. I left Google at the age of 25. I was not married yet, and I had saved up enough money to bootstrap my own business for about 6 months. And ultimately, within that 6 months, I made enough traction to raise a seed round, and the rest was history. We have a 3-legged stool of revenue. The first is through advertising, and we do primarily native advertising, so branded content as well as experiences and events. We also sell classes online. We have almost 100 courses that women pay for. And then the last leg is through our merchandising business. So one big challenge over the last 12 months has been the notion of whether or not to put our content natively on distributed platforms, ranging from Snapchat to Pinterest to Facebook and Instagram. A lot of the platforms will automatically give you a little bit more reach per their algorithm if you're putting content natively on them. However, they initially had not built monetization tools. So it was a question as to whether we wanted to sacrifice our control over our content and our distribution. I personally believed that the social networks and all of these platforms would get nowhere if they didn't have great high-quality content, and that they would figure out a way to support those people who are providing that content. And that's been paying off. We now reach 125 million uniques a month. We also have 350% growth in revenue bookings year over year. Some of our newer business segments, like our online classes, have grown over 300% year over year as well. We are producing over 100 pieces of content every day and hundreds of videos every month. I think it's so important for a digital brand to have an offline counterpart, especially for any brand that's trying to reach millennials or Gen Z. So we started an event called Remake 4 years ago, just a year into the business. Fast forward to today, it's a 15,000 person festival. It's been doubling in size year over year, which is proof that it's working and that it's only going to go bigger and better from here. We know millennial women, and we want to create content for them no matter where they are and no matter what they're listening to, reading, watching, or generally consuming.
We are a luxury bedding destination that's online only and direct to consumer. The company was started by my wife and I, and we were in the market for new sheets. We just really hated the shopping experience. It wasn't consistent with what we're used to with shopping with apparel or other items online. We first started with some of our savings, I'd say about $20,000, to get the prototypes going, build a website, do a photo shoot. It really went to the bare minimum product. And then we raised a little bit of money from friends and family, about another $100,000 or so. That got us to our Kickstarter, where the goal of the Kickstarter was to finance our first purchase order. Our goal was $50,000 of sales. We ended up selling $230,000 worth of product in the first 30 days with no marketing dollars spent, really just word of mouth. Social media has been really, really important to building the brand and getting the word out. There's some logical people that are in market for our product. People that move into new apartments. Facebook has this data of an address change. People recently engaged that are doing registries. Pinterest is really, really great for the home decor space. And then there's influencers, that people that really spread the word and advocate for the product. We're very confident that once it gets into someone's hands that they're gonna love it. We didn't take any funding until very recently, and we bootstrapped the whole thing, so we had to sell to buy. We would sell all of our inventory, use that money, and roll it over to buy more inventory and more and more. And that created problems of like this up and down, up and down, up and down. It's very hard to get momentum and the wheels turning when that happens. It's planning ahead, getting ahead of your inventory, getting ahead of the demands, just to make sure that you have enough to facilitate the growth. It seems simple, but it's super complicated, the forecasting element that we've gotten much better at. And that's one of the biggest challenges to any consumer products business in year 1 or 2. Our first year of sales was about $250,000. It was mostly the Kickstarter. Year 2 was 10x growth. We broke 20 million in sales last year, so it was another 10x, and now we're on pace to more than double that yet again this year. 5 years down the road, who knows? We might be, the biggest, bedding home goods company in the world. We might get acquired by a bigger company that's looking to get a closer relationship with the customers. Once we feel like the bedding category, like we've really mined everything that's there that we could, then there's opportunity to move on to other categories that supplement it in the home space as well. But we're not ready for that. There's a lot more to do where we are right now.
Dia & Co is a personalized online shopping service for women who wear sizes 14 and above. Plus-size women in the U.S. make up about 67% of the population in the U.S. and pretty shockingly make up only 17% of apparel spend in the U.S. Dia was founded on the simple mission of really creating equality for her as a customer and therefore really bringing her to the table for the first time within fashion. One of the things that was very clear for our customer was she was as underserved in retail as she was in media. And what that meant was that discovery channels were actually quite challenging. The one group of people who had meaningful sway and were truly, in a way, the gatekeepers of the plus-size community were the bloggers. And bloggers became our earliest advocates. From there, we benefited from word of mouth and the power of a positive experience, and we've kind of grown from there. We very quickly realized that we had this growing, avid, excited customer base and a distribution network that was working. And where we were having the biggest trouble was in finding really great supply. We're based in New York City, and we would literally scour Manhattan to find the best merchandise in our customers' sizes to send. Eventually, we were able to work with a group of designers that agreed to partnering with us to expand what they were offering. So we've worked with some of the best design and product development teams in the industry to develop 8 brands that are exclusively at Dia, and those brands in a lot of ways make up the backbone of the service. We recently elevated the call that we were making to brands by taking out a full-page ad in the New York Times on the first day of Fashion Week, really calling on brands to step up. The conversation around inclusivity in fashion is one that is had often, but what we haven't seen yet is an actual move from speaking about inclusivity to actually producing the garments that women can wear. And that's a role that we can play, that we feel a responsibility to play, and that we're very excited to play for our customers. The core of our product is understanding our customer as well as is possible. We serve women who are very early in their style journey and some who are much farther along in terms of understanding what they like and what they don't like. And the goal of the service is to really meet her where she is. And it really becomes an iterative relationship where we're showing her product, she's giving us feedback, we're showing her better product, she's giving us feedback, and over time, we get to know her incredibly well. Our mission at Dia is to be the beloved brand of plus-size women.
We were able to start Warby Parker with $120,000. That enabled us to build a website, get some PR support, and purchase our initial inventory of frames. I remember launch really vividly. It was February 2010. We made it live February 15th. We didn't tell our friends or family because we didn't know the website would work. Immediately the orders started pouring in. We hit our first year sales targets in 3 weeks, sold out of our top 15 styles in 4 weeks, and accumulated a wait list of over 20,000 people. We had to start cutting class because we were full-time students at Wharton at the time, getting our MBAs. It was really crisis management. We had orders coming in. We actually didn't have enough inventory to fulfill those orders. We had to think about a communication strategy, a customer service policy. We would just profusely apologize, but also explain to people what was going on. We just launched. We didn't expect to have this much demand. And when you tell people the details, they can have patience and they can understand and sympathize. Brands build relationships with customers much like human beings build relationships with other human beings, and that's through vulnerability. Our first store was actually my apartment. We laid out the glasses on the dining room table, and that was our first foray into learning about the bricks and mortar world. So we did a pop-up, we bought an old yellow school bus, ripped out the interior and turned it into a mobile store, went to over 15 cities across the country. In each city we would be in roughly 3 locations, so we could tell you which intersection performed best for us. So suddenly we had a roadmap for where to open stores. We now have 46 stores across the country. It's really been an important part of Warby Parker's growth. We founded Warby Parker to create a company that would do good in the world. At the very beginning, we committed to distribute a pair of glasses for every pair that we've sold, and we've now distributed several million pairs of glasses to people around the world. We've always believed in aggressive but sustainable growth. There's this mentality of move fast and break things. We believe in moving fast, but move fast deliberately, and when you break things, let's make sure it's not catastrophic. By staying focused and reducing complexity as much as possible, you can actually grow faster, longer. We're trying to build a company that's going to be around for the next 100 years.
Laura, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yep.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of
profits would help. So at some point we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues. that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes, because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent, and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth, and listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are 3 keys to transport and where the industry is going: autonomous, electric, and shared. And I think all 3 are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
to,
in
mean
means
to a layman like me?
Mean,
crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars? I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a
you
brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously, though, the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes, yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. Origins of the creative content of a lot of the work at Light Bright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. leak and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
This is Bloomberg Daybreak Middle East. Your top stories this morning.
Asian stocks edge higher as China softens its anti-gaming rhetoric, but the Delta variant, well, that spread adds to the growth worry.
The Fed's Mary Daly says there's no reason not to expect many of almost 10 million Americans currently out of work to return to the labor market. That as investors count down to Friday's non-farms.
Ibrahim Raisi is sworn in as Iran's president as pressure on the Islamic Republic grows following last week's deadly attack on a vessel in the Gulf.
And Saudi stocks extend their rally. They're now on the longest winning streak since 2007. We look at what's driving the gains and how much further they have to run. As it goes 8 a.m. across the Emirates, warm welcome to the show. I'm Manis Krani in Dubai.
And I'm Yusuf Gameneddin right alongside you. The Delta variant and still very much weighing on investor confidence this morning. Here's a bit of a breakdown of where we stand on the S&P 500 mini futures. We're called just barely below the flat line here by 0.1%. Bank of America says that a dovish Fed in July keeps the music going, with the S&P 500 likely to rise further until the Fed has to tighten. They're recommending short-dated calls as the next trade. They underprice upside potentially. Would have done that the last 10 out of the last 13 years. You would have consistently outperformed the S&P since 2018. Look out for earnings from General Motors and Uber later in the day. Brent crude, 0.1% higher here at $72.40 a barrel. It is going to make things complicated, the Iranian comeback. And then you've got this deadly attack on a tanker near the Gulf of Oman over the weekend. The U.S., the U.K. and Israel all blaming Tehran. The change in presidency in Iran. All of that uncertainty around the addition of 1 million barrels of oil a day, and the geopolitics is going to be very difficult to figure out amidst the Delta opaqueness of sorts.
So what is going to drive these markets? It is the Delta variant. That's according to Westpac. It's going to drive the FX rates and the bond markets. You're at 284 on Chinese government bonds. But to understand the biggest risk, Delta is now prevalent in half of the 32 provinces. Nomura says Beijing's zero-tolerance approach on COVID could delay the full recovery. The bond markets trade at 284. BI say we could trade down to 281 in the risk aversion stance. Nomura lowered the growth target for China to 5.1% and 4.4% in the third and the fourth quarter. So this is the risk in the bond markets in China. How's it playing out in currency as Delta rises in China, as lockdowns become more normalized? Money flows into Swiss franc. The dollar is down. What you're looking at here is the Swiss franc rising for 8 days in a row, the longest winning streak on Swiss franc in a year. The speculators are bullish on Swiss. Will the SNB intervene? Keep an eye on dollar yen. Again, multi-month lows for yen as rates test zero for the first time since December in Japan. All roads lead to the Delta narrative and the risk aversion that comes with it. Will it build? Juliet Saleh has the bounce back in some of the tech stocks in Singapore. Jules, can we hold the line? Good day.
Hey, Manis. Yeah, certainly, as we saw, Chinese state media kind of toned down that rhetoric on online gaming, which had really sent ripples through those big players yesterday, including the likes of Tencent. But we are seeing a bit more calm coming through. Hong Kong's Hang Seng Index up by about 1.5% as we see a broader gain across the regional benchmark index. Certainly this rebound coming through in Tencent and a lot of the tech players. But SoftBank is weighing on the Nikkei on this potential block of its $40 billion sale of ARM to NVIDIA. Elsewhere, you're seeing communication material stocks lead. And have a look at Taiwan's TAIEX up 0.25%. I want to show you this chart because we've been focusing on the big sell-off that we saw in Tencent, the most in 10 years yesterday. That means that TSMC, as we know, listed on the TAIEX, has now replaced Tencent as Asia's biggest company by market value. And TSMC up by some 12% this year, thanks to a lot of global demand for semiconductors. Yusuf.
Thank you very much for that, Jules. We will touch base again later on. Juliet Saleh there. Let's also run you through the first word headlines from around the world and get out to Annabelle Jewelers. Annabelle.
Thanks, Yusuf. Well, an ultra-conservative protege of Iran's supreme leader has been sworn in as president. Ibrahim Raisi will have to immediately deal with growing pressure over a deadly attack last week on a vessel in the Gulf, which the US and others have blamed on Iran. The change in power is also increasing doubts over the survival of the 2015 nuclear deal. President Biden and other top Democrats are calling on New York Governor Andrew Cuomo to resign. That's after a state report found he sexually harassed multiple women and violated laws. State Attorney General Letitia James says Cuomo and his staff retaliated against at least one former employee for coming forward. Cuomo denies the accusations.
Are you now calling on him to resign?
Yes.
And if he doesn't resign, do you believe he should be impeached and removed from office?
Let's take one thing at a time. I think he should resign.
The spread of the more infectious Delta COVID-19 variant has pushed the threshold for herd immunity above 80%. That's the view of the Infectious Diseases Society of America. The figure represents a much higher bar than the previous estimates of 60 to 70%. That's because of its high transmission rate. The CDC says 50% of Americans have been fully vaccinated. And extreme heat in Greece is straining the national power supply and fueling wildfires. The soaring temperatures are also forcing the closure of the Acropolis and other ancient sites. It's Greece's worst heat wave in decades. Temperatures approached 42 degrees Celsius in Athens. Hot weather has also sparked wildfires and impacted holidaymakers in Turkey and Italy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Annabelle Drawlers. This is Bloomberg. Youssef?
Thank you very much for that, Annabelle. Let's get to our top story in a bit more detail. Beijing's clampdown on its tech sector, along with the spread of the Delta variant, they're subduing sentiment. Chinese stocks listed in the U.S. slid overnight amid fears online gaming may be the next industry in the crosshairs. China's state media has come out with a softer tone this morning, walking back some of the hardline rhetoric on gaming that spooked markets yesterday. Still, Alibaba's revenue missed estimates for the first time in more than 2 years. That's a sign that the regulatory crackdown is taking a toll. Let's bring in Harold van der Linden. He's the head of Asia-Pacific Equity Strategy at HSBC. Harold, in your research, you outline how Chinese internet stocks go through phases, from euphoria and then goes all the way down to aversion. We're in aversion territory right now. Is this the time to step in, given how far some of these names have fallen?
Well, we've been cautious on these Chinese internet names since late last year. And as you said, we've gone from euphoria into a crisis mode, and we're now in aversion mode, meaning people don't want to look at these stocks anymore. And if we look at some of the data in the markets, people tend to be underweight now. Valuations are still somewhat elevated, but getting against their own historical levels quite low. Now, what history tells us that in this aversion mode, sometimes stocks overshoot on the way down, just as they overshoot on the way up. So we got to be cognizant of that as well. I'm not quite sure if this is really the time to say today we should start buying these names, but we got to be careful that we're not overshooting on the downside. And so we're going to look for opportunities across the whole sector for individual stocks that maybe start to look attractive here.
Don't forget, we can always do the 12-month averaging in incrementally, Harold, and we'll end up with a beautiful, smoothed average. When it comes to the flow, one thing that caught my mind is the institutional flow out of China stocks, but the Reddit or the retail army flow in last week on a net basis. From your interpretation of the data, the wave of selling that we have seen and positioning in this market, how would you describe institutional positioning, current exposure, and I suppose momentum?
Yeah, what we've seen is that institutional investors have gone from a straight-out overweight position and in stepwise have reduced their exposure. Initially, it was to certain retailers, so some of the e-commerce platforms late last year that they had some IPOs that was delayed, so they went overweight that particular sector. Then it went into some of the other sectors like food delivery, and more recently we've of course seen a lot of turbulence in the education sector. So that's where people now seemingly are underweight as well. So it's gone step by step by step. And you're right, for every seller out there, there's a buyer, right? So as institutional funds have become underweight, we've seen actually retailers starting to pick up some of these stocks. But generally speaking, mutual funds are pretty much underweight across the board in this sector now.
Harold, when I look at the reopening trade in China, at the recovery of the economy there, I look at industries like aviation, and we have some fresh data out in the last few hours, fantastic work that was put together. This is a story of the biggest challenges that a lot of places in Asia are dealing with around suspending flights because of fears of the Delta variant and increasing the testing of airport workers. That's taken a chunk out of China's massive domestic aviation trade, which has performed the best among the largest pre-pandemic global markets. To what extent is that likely to weigh on some of your calls China internet outside of that?
Yeah, I mean, some of the transports, parts of the transport sector, I think will continue to look interesting on a kind of maybe a longer term basis. It's very difficult to say when really travel is going to normalize, right? But if it normalizes, a lot of the regional airlines will struggle with getting their planes up and running again. Quite a few of these planes are simply in Alice Springs or in Utah somewhere, covered in plastic, waiting to be reused again. So if travel normalizes, for a lot of airlines, it will take time to get these planes up and running again. You're going to clean them up, make sure that they meet all kinds of safety requirements, get the staff maybe sometimes retrained before you can get in. That's not for the Chinese. The Chinese have been running pretty much domestic travel has been strong, so they've been able to keep these planes up and ready and going. And as regional travel would come back, they're the ones who we think are going to gain some market share. So if you look a little bit through this soft patch now, I think in the longer run, these stocks might actually look quite interesting.
Okay, Harold, stay with us. Harold van der Lind, more work to do on the markets. Up next, investors count down to Friday's key jobs report as more Fed officials, they weigh in on the recovery. We discuss the implications. This is Bloomberg.
What you said was we need to make them in America. Does that include overseas companies making them if they have the plant in America?
I would certainly be in favor of them having operations in America, absolutely. You know, Samsung, TSMC, there are companies that are in allied countries, and you know, we certainly want them operating in America and producing chips in this country, yes.
So we have a significant chip issue, but there are other supply chain issues as well. As I know you're monitoring what's going on. Where have you seen other problems in the supply chains right now in the United States that need to be addressed?
Particularly in home building supplies, you know, lumber and all the related supplies, glue, adhesives. And you see it playing out. You know, home prices are high. If you go to Home Depot or Lowe's, you'll see prices are a little bit high. So, and that's all because of the lack of supply, just disruption.
How are you navigating what seems to be a really tough situation better than almost anyone else?
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance, as well as, you know, guide up for the rest of the year.
Another day and more Fed officials are weighing in on the pandemic recovery. The San Francisco Fed President Mary Daly says there's no reason not to expect many of the almost 10 million Americans currently out of work to return to the labor market over time. Fed Governor Michelle Bowman agrees. She thinks that the high number of job openings is a promising sign, though she did flag that it may take longer for people to re-enter the labor force amid the changing lines of work. Now, their comments come ahead of Friday's non-farms report, which will factor into the central bank's taper calculus. Harold van der Linde is the head of Asia-Pacific Equity Strategy at HSBC. Harold, the bond markets seem to be immune to the taper discussion. Perhaps it's more focused on the next hiking cycle and how much will come to bear in that. When will they start to taper? And more importantly for me and the equity market is, what is the scale of the next hiking cycle that you think may be brought to bear?
Yeah, no, that's a very good question. I think what we've seen is that bond yields since, what is it, April, June, they've actually started to decline. I think a lot of that has got to do with it. Yes, inflation is rising. Yes, there's talk of increases in interest rates in the US, but that was at some particular point in time well priced in, and it does look like this whole reflation story that we had at the beginning of the year. I think you and I spoke about this a couple of months ago as well, that started to peter out, and a lot of it was one of kind of base effects, and that therefore maybe inflation not going to be as strong as what people initially anticipated. Be it is as it is, bond yields have come down, and that's actually positive for equities, global equities as well as Asian equities. That's a supporting factor in the current environment.
So with that kind of scenario, so let's go with inflation being transitory, that the Fed is going to start communicating some form of tapering timeline in the next 3 to 4 months. How do you craft and refine your investment strategy around that specifically?
No, that's, I mean, these are the two inputs. You have these lower bond yields, at least that's our view, that these bond yields are going to probably range bound from here, but they're quite low, right? So as against where they were, say, 4, 5, 6 months ago. And we have, we just spoke about the China internet sector, that's a humongous sector that we're a little bit cautious on as well. So if you can take those two together, then you got to look where else in the region do you really want to put your money. We like Taiwan, have liked it for quite some time now. I think India has benefited from outflows from China as well. It's the market that's least correlated with China. So if you don't like China, India is a good place to go to. But the markets that I think look quite interesting, that also benefit from these lower bond yields, are the ASEAN markets, markets as Indonesia and Thailand. Now, they have their own difficulties. COVID is really quite rampant, particularly in Indonesia at the moment. But the global backdrop for those markets is improving. So we like those markets.
Harold, the one thing that we were chatting to a couple of CEOs about, the bank CEOs about, was the fact that the IMF had downgraded Asia growth in their recent report. They talked about a bifurcation. They downgraded India the most. So you're having a little bit of swag with the IMF, are you? I mean, you've got a counter call. What's it based on? Is it based on vaccination? Is it based on herd immunity? Is it based on an unspringing of growth?
There's two key things that actually drive growth in Asia at the moment. One is, to a certain extent, the assumption that over the next 12 months, things will normalize a little bit. The other one is simply tech earnings, and that's a global story. And this is a very nice example whereby Asian markets and Asian earnings are actually not so much driven, not always so much driven what happens in the regional economies. Taiwan sells products into the US. So as we see in the US, earnings growth is pretty strong there. Taiwanese companies benefit probably from that to a certain extent as well. Even in markets such as Indonesia or India, the economy might be weak, but the nature of the companies that is listed in those markets is actually quite defensive. Most of them are kind of food and beverage companies or local retailers or global plays where, earnings is driven really by global sentiment. So there's a disjunction between the IMF and what happens on earnings profile in a lot of those markets. So we're not necessarily disagreeing with the IMF. It's just that we look at it slightly differently.
Harold, great catching up. Thank you for weighing in on that for us. That's Harold van der Linde. He's the head of Asia-Pacific Equity Strategy at HSBC. We have some breaking lines here in the Bloomberg earlier, and I want to just pick those up again and run you through them. From Japan, 10-year yields dropping below 0 for the first time since December, tracking the recent slide in U.S. Treasuries. So we were 1.5 basis points lower on Wednesday, extending some of the declines we've seen earlier. I mean, look, the bonds have moved in tandem with U.S. Treasuries, with yields falling there, fueled by expectations that the Fed is going to look past the recent spike in inflation and keep the policy stance accommodative. Much more to come. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Let's get to some of the corporate earnings, because BP has followed its peers by increasing dividends, and share buybacks got higher as well because of the crude prices that help boost profit. BP CEO Bernard Looney spoke to Bloomberg's Anna Edwards about the outlook.
I think our team has done a great job in the past quarter, and we have taken the decisions that you've just talked about, and they're really based on three things. Number one, Anna, it's the underlying performance of the business, which, if I can say, has been strong in the quarter. We delivered our cash cost savings target 6 months ahead of plan. We actually had the strongest convenience result in this quarter in our history. So the underlying business, first and foremost, is performing very well. Secondly, Anna, the balance sheet continues to strengthen. This is the fifth quarter in a row where net debt has come down now to $32.7 billion. And thirdly, it's about our confidence in the outlook for the environment. So when you look at it from that dimensions, they're the reasons that we've taken the decision that we've taken. $1.4 billion worth of buybacks in the third quarter and a 4% rise to the dividend. And actually, as we look out, Anna, over the next 5 years, at an oil price of around $60, we have the capacity to raise that dividend annually by about 4%, as well as, by the way, $1 billion a quarter approximately of buybacks. And that's about $4 billion a year at $60, which is probably 5% of the market cap of the company today. So that's really what this is about.
Okay, and you've increased the dividend and you're doing this share buyback. I think you've said in the past that any excess cash would go in share buybacks and not in an increase in the dividend. So is this a change of position on the dividend? Why that change in thinking?
So our financial framework, Anna, remains exactly the same. There are 5 elements to it, and the first priority in our financial framework is a resilient dividend, and that absolutely remains the case today. And priority number 5 is that we'll distribute excess cash, 60% of excess cash, to our shareholders in terms of buyback. What you're seeing around the dividend is really a story of confidence. It is a story of confidence in the underlying performance of the business. It's the confidence in the balance sheet. And 12 months on from when we laid out our strategy, of course, the world's in a very different place with the environment. Global GDP is now back to pre-pandemic levels. The vaccines clearly are working. People are back flying, not to the same extent, but they're back flying. People are back driving. Not alone that, but we're also seeing OPEC Plus has maintained strong discipline. And then, Anna, in the US shale business, which has typically been a huge responder to prices, you're seeing a different business model emerge there, where cost of capital is higher and investors and operators are being much more disciplined and focusing on cash. So it is a very different world, and that's why we've gone ahead and made the decision that we've made around the dividend.
Breaking news coming through from Toyota. These earnings from the automaker, 997.49 billion yen. This is the operating income on the business, well ahead of the estimate of 758. But when it comes to the guidance, and I'm going to be interested to see whether this goes hot, full year guidance is at 2.3 trillion yen. They had originally guided for 2.5 trillion yen. So at the moment, they're guiding for 2.3 trillion yen. And they say in Europe, their operating profit came in at 30 billion. Of course, Yusuf, we're back to the showrooms, back to buying cars. We saw that in their July numbers as their order numbers jumped by 32%. So a big beat.
Yeah, absolutely. So just some more color coming through here. The fiscal year global sales target is unchanged at 10.55 million units. You said it's all about the guidance. It's all about the production outlook as it releases these numbers. The market is trying to understand whether this automaker can maintain a competitive edge amid the continued spikes in virus cases, and then also all this fear around potential shortages in semiconductors. And we got this a little bit from BMW. Toyota is basing forecasts on 105 yen over dollar. They're citing 910 billion yen in FX impact on operations. In terms of the regional and geographic breakdown, again, you talked about Europe, North America operating profit at 248.8 billion yen.
Well, the stock is down, as you can see now, 2.25%. I take you back to the guidance. Yes, it's beating on an operational level, the operating income, but the guidance of 2.3 trillion yen could well be something that the market takes a closer look at. The operating profit in Europe turning around 30 billion yen. Asia, excluding Japan, 166 billion yen versus 42. So as to why it's down 2%, well, I'm sure the analysts will do their briefing and their analysis. We'll track it after the break.
A gente estava há um ano sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
I assume you have a lot of people saying the food isn't as healthy as they might want it to be. Is that the biggest challenge, or just growing the company?
Ray Kroc had a famous line, if you're not green and growing, you're red and rotten.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Daybreak Middle East. Your top stories this morning.
Asian stocks edge higher as China softens its anti-gaming rhetoric, but the Delta virus spread adds to growth worries.
The Fed's Mary Daly says there's no reason not to expect many of the almost 10 million Americans currently out of work to return to the labor market. That as investors count down to Friday's non-farms.
Ibrahim Raisi is sworn in as Iran's president as pressure on the Islamic Republic grows following last week's deadly attack on a vessel in the Gulf.
And Saudi stocks extend their rally. They're now on the longest winning streak since 2007. We look at what's driving the gains and how much further is there to run. Let's check back in on those markets. Tencent is bouncing. The global media, the Chinese media, seems to be stepping back a little bit from their angst yesterday. Juliet Sali has been reading all of the newspapers and all of the flow. Quick up some, Jules.
I'll do it in a minute, Manus. Yeah, Tencent rebounding for about half of what it lost yesterday as Chinese state media toned down some of that rhetoric. So you are seeing a good bounce on the Hang Seng Tech Index. On the lunch break, up by 3.3%. And more broadly, Asian stocks also doing well today. A little bit of a downtick, though, in Japan's market. We do have those concerns about Nvidia and the ARM deal weighing on SoftBank. The Nikkei off by about 1/3%. I mentioned, of course, the fact that Tencent lost so much yesterday means TSMC is now Asia's biggest stock in Asia by market cap, and the Taiwan index up 1/3%. Let's quickly look at the bond market. I know you've been following what's been happening in Japan. We did see the benchmark 10-year bond yield fall to zero for the first time since December. Of course, we're also watching what's happening here in Chinese bonds declining for a second day after this PMI beat, and in South Korea, bonds moving to the upside after the Bank of Korea minutes indicated we could see some pace of policy normalization in the next meeting. The Kiwi continuing to gain as well. This after we had that very impressive jobs beat suggesting that the RBNZ could move in the coming months or even at the next meeting. Yusuf.
Yeah, the RBNZ and the RBA, they're always a bit of, I guess, a canary in the coal mine kind of situation, right? Where you get a bit of a heads up in terms of what the rest of the monetary policy world could expect going forward. Calm today in markets in China, but analysts, they've been putting out their notes, and they're gonna basically argue that China's regulation might or might not affect wider EM assets.
Yeah, Goldman's saying, look, it probably won't because you are seeing wider EM markets, the likes of Brazil, Mexico and India actually rise despite this downbeat movement you've been seeing in China, saying that they are a little bit more insulated from what is happening in China, which is similar to the theme that we've been hearing from a lot of analysts this week, that it really is going to be something that is a regulatory local concern rather than this concern more broadly about a wider contagion. This is, they're saying, as long as it does contain to China's domestic policies rather than that broader growth story. And on that broader growth story, of course, the spread of the Delta variant in China weighing in on GDP concerns as well, and how that's going to play through into the consumer-led recovery. Yusuf.
Jules, thank you very much for that roundup. That's Juliet Sali there. Let's get back to this part of the world. Ibrahim Raisi, an ultra-conservative protege of Iran's supreme leader, has been sworn in as president. It comes as a new security crisis swirls in the vital Gulf shipping routes, and doubts grow over the survival of the troubled 2015 nuclear deal. Let's get to the implications for economies around the region with Athira Prasad, Director of Macroeconomics at Nasser Saidi and Associates. Athira, I look at an important benchmark for understanding geopolitical risk in the Gulf, and that is the Saudi Arabian 12-month forwards. And those have been rising and rising and rising. We're back at levels we haven't seen since October of 2020. Just give me your initial read on how this new president in Iran could shift our understanding of tensions for the remainder of this year.
Thank you, Yusuf. Well, we have to see these series of recent tanker attacks in a bit of a historical perspective, right? Because this follows a series of attacks on the tankers in recent years, and it's quite near the Strait of Hormuz choke point, through which a fifth of all of the global oil passes. So two aspects. One, it increases geopolitical risk in the region, specifically maritime risk, because you have close to 90% of the trade traveling by sea. And any interruptions will mean that there will be a delay, there will be implications on the supply chain. So, and these tanker attacks, the second aspect is that it complicates efforts to revive the nuclear deal, which was signed in 2015. Now, we know that there have been 6 rounds of indirect negotiations, but this has been kind of ended in June, and no date has been set for resumption, which means that the political transition that's happening in Iran, you have no clarity on how the new administration will want to proceed with the negotiations. So that adds another kind of uncertainty to how things will look for the region going forward.
Athira, good morning. It's Manis. Yes, and this seems to be in part reflected in the oil market. I mean, everybody has this huge consensus build that Iran would be back, the JCPOA would be done and dusted before the end of the year. We understand that Raisi is not somebody, so far, the consensus seems to be not somebody who's going to stand in the way of this return to the JCPOA. They want rid of the sanctions. Are you and the team at Nasser Saidi Associates still jumping with a base case that we get a deal this year and some movement on sanctions and therefore oil and more Iranian barrels this year?
Iran is a big question mark at the moment because from what the rhetoric that's coming out from there, it might be that the focus would be on improving the domestic economy first before a focus is given to what's happening internationally. So, and given that no date has been set yet, is a bigger uncertainty on how they want to manage the process going forward. But that said, oil prices are likely to remain volatile through the year, given the concerns that are there on the tight oil supply and potential decline in demand. So volatility is going to be there through the rest of the year.
RBC writes this morning that the Iranian supreme leader may be betting that a policy of brinkmanship may yield more concessions. I want to move away a little bit from the oil story and to the United Arab Emirates, where we're seeing the government take more steps to ease an entry ban for some South Asian countries, African countries as well. The Delta variant is causing quite a bit of dislocation in many parts of the world. Are you concerned that they are lifting restrictions too fast at a critical juncture for the fight against the coronavirus?
If you look at the UAE specifically, I mean, it's got very high immunization rates, right? Because about 79% of the population has received at least one dose, and 70% are fully vaccinated. So with the level of high immunization rates that you have here in the UAE, it is not surprising that they have lifted the restrictions, because most of the restrictions that have been lifted is for completely vaccinated residents who are currently in their home nations. So it's not surprising that the move that has happened. Furthermore, you've had the recent announcement that the Sinopharm vaccine will be available for children as well. All this kind of paves the way for the UAE economy to, go back on track in terms of demand recovery. And adding to that, the UAE reforms that have been happening in the past few months, kind of boosting real estate, boosting in general the consumer confidence and business confidence in the region as well, which has been indicated by the PMI, which was published yesterday.
Athira, I just want to get a sense, let's close off with Egypt. We're seeing global food prices rise for the past 13 months. We're at the highest level since 2011. I look at the language used by the president in Egypt, the leader there calling for a hike. It's time to review the price of bread, the staple, the absolute staple of many, many nations. This is one of those, I would say, tail risks, the reality for society dealing with inflation. How much are you thinking about the tail risk of these rising prices of staples in the region?
Egypt is an interesting case. I mean, like you mentioned, the revelation that the price of subsidized bread could likely increase. We have no details on to how much or the timing of when it's going to be implemented. But if you look at the inflation data, the latest number was around 4.9%, and it showed a monthly inflation of food items actually slowing down. And given that it's still well under the target of the central bank, which is 7% plus or minus 2 percentage points through fourth quarter 2022, it seems to be reasonably well under control. Now, that said, they've had fuel prices increase last month. You've had a 15% average increase in power prices in line with the IMF loan program and so on. So this will likely see inflation tick above, say, maybe 5% to 6% in July and August, but it still remains under the target range. So for now, unless it's a drastic price increase in bread, it seems to be very well manageable for Egypt.
Athira, thank you so much for being with us. Athira Prasad, the Director of Macroeconomics at Nasser Saidi Associates, our guest this morning on food prices in the region and all things moving markets. A couple of quick lines moving in the Japanese market is the price of Toyota. We had dropped by 2.25%. We've bounced back ever so slightly. Yusuf, this is in part mostly to do with the unchanged guidance, and therein lies the point. 2.5 trillion for the year. The market had hoped for an upgrade to just under 3 trillion, and there's a lovely line there. They will invest aggressively in mobility transformation. That seems to be what's just holding Toyota back at the moment. We'll talk more about autos through the show. This is Bloomberg. Rack Ceramics' second quarter earnings, they're out. They've hit the tape. Total revenue rose 70% year on year to 700 million dirhams, surpassing the pre-pandemic levels. Profit reached 94.9 million dirhams from the sale of assets in China. Let's get more detail on the story with the CEO, Abdullah Massad. He joins us now. Abdullah, great to have you with us this morning. So you've turned it around from what was a pretty tough year last year. We're breathless about house price rises and building frenzy that's going on. Where are your strongest markets? And I really would like to know is just how strong is the UAE?
Thank you, Malcolm, to be with you on this program. As you know, Rack Ceramics is a multinational company. We sell in more than 150 countries. We have industrial bases. 70% of our capacity is based in Ras Al Khaimah in the UAE. Then we have factories around the world in India and Bangladesh. And as you mentioned, we had factories in China, which we exited this year. So I can see that during the pandemic, we continued to invest in technology, to upgrade, to update our technology and work on our efficiencies. And basically, it paid back. Wherever the market picked up, we were ready to increase our capacity and to cope up with the demand coming from the market. Our main market is the GCC, Europe, India, and Bangladesh, and for sure the rest of the world.
Yeah.
Let's
flesh that out in a bit more detail in terms of your priority markets, Abdullah. Gulf, sure, I get that, but which country specifically? I mean, it's likely to be Saudi Arabia. What are your plans for such a high priority market? Are you going to invest more in CapEx? Are you going to expand production facilities? Maybe more in all areas of the supply chain?
Yusuf, you know, we are supplying. Saudi Arabia is the largest market in the GCC. And no doubt the demand on our product in Saudi is at a high level, and we are able to supply. We invested, actually, if you see 3 years back, on buying distributors. We opened showrooms recently. In the second half of this year, we'll be opening 2 new showrooms in Riyadh and 1 in Medina. We are, since the last 3 years, as we declared that we applied to have industrial license in Saudi, and we are still following the procedures. Saudi is an important market. The whole Gulf is an important market. And the question before is on UAE. UAE is one of our strongest markets. For sure, this year the demand was slightly not as as it was, but at least our demand or our supply increased by 2.8% during this year.
Abdullah, every industrial producer that comes along onto the show is talking about bottlenecks in supply and price hikes, inflation in their supply chain. What can you tell us about where is the tightest part of the input side for you? And are you able to raise prices? And if so, specifically, by what percentage? Let's start with an answer on that. How much are you raising prices specifically?
Look, our prices raised during this year by between 3 to 5%. The main problem for any industrial, as you said, is the inflation and the logistic cost behind. And for sure, for us, we import raw material and we export. And on export containers, some of the countries, the rate increased by more than 300%. So we worked, as I told you, on our efficiencies, and here we succeeded or we managed to improve our productivity and reduce our costs. So we will not pass all the increase in cost to the end user. As you know, the market is also stuck, and we want to maintain our market share. But we passed 3 to 5% during this year.
I'm wondering, Abdullah, what your plans are to lock in more growth. Yes, it's been a solid quarter. The outlook looks encouraging. But what can you do to tap that or accelerate around that theme? Like, are you considering acquisitions, potentially in new markets? What kind of capital do you have to play with? What's your war chest look like to get out there?
Look, Yusuf, if you see our net debt to EBITDA is 2.04%, which at times, which we are at a very comfortable level from a growth perspective. We will have access to capital. If you see, our strategy was the last 7 years was the value creation plan, which we had in 2014, is to exit non-core. And this is what we exited. Today, more than 98% of our revenue is coming from our core business. And we are working on increasing our capacity in the UAE, in tiles, sanitary ware, and in our tableware, which we are launching upon China, which is the new production will be launching by end of this year. At the same time, we are also working on increasing our capacity in India and Bangladesh. And also we are looking at possible growth in any case, organic or non-organic.
Abdullah, you mentioned the various sites that you have production, the UAE, India and Bangladesh, 21 production plants. Will you make vaccination mandatory? Have you required all of your staff to mandatory vaccination, and are they all back on site?
Look, we did not make it mandatory, but as you say, we discussed with our team, and I can tell you the majority of our employees or our strength is vaccinated, but we did not make it mandatory. But the benefit of the vaccine from me till down, so I believe the majority of us are vaccinated. And in terms of this, yes.
Yeah, we're going to leave it there. Thank you very much for joining us on the show. That's Abdullah Masadi. He's the CEO of Rack Ceramics. Do come back for the next quarter, give us a bit of an update on how things played out. Plenty more still to come. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Friday is Jobs Day.
For every positive thing you point to, there's something less positive.
The June report fell short of estimates.
The unemployment rate goes up to 5.9%. It's one of those things where you say it's good news. The unemployment rate goes up.
What should we expect to see from July's report?
A lot of reshuffling. We'll continue to see hiring at large pace.
Are people looking to return to the workforce?
Businesses have a lot of jobs to fill. They can't find workers.
The July jobs report, Friday on Bloomberg Television and Radio.
Let's get back into Middle East markets with our equities expert, Farah Al-Bahrawi. The Saudi stock rally continues. What have been some of the driving factors here, and what are the technical indicators suggesting in terms of how sustainable this whole thing is?
Morning, Yusuf. Yes, just to answer the last bit of your question, Saudi's relative strength index is actually climbed quite a little bit into overbought territory recently, which may suggest that there could be downward momentum ahead. But we've seen that the Dow has traded in overbought levels throughout the year so far, and it hasn't taken a hit. Just to look at the rally generally, the index has been rising for 12 days now. That's the longest in 14 years. If it rises anymore, it will be the longest rally since 2003. It's really a mind-boggling performance. Of course, it has been supported with the oil price rally, with the government projects, but this recent rally we're seeing is largely in part to earnings that are coming in very strong, very positive. Al Rajhi Bank has been the key leader for the index, pushing it higher, and more names are to come.
And back here in the UAE, we've just heard from Rack Ceramics. They're upping their production game here. They're all in. They're passing on prices. But markets are pretty much on fire. How have we performed? What are the key developments in the past couple of days for you?
For me, Manis, the most interesting development is Morgan Stanley's expectations for the MSCI review, not this upcoming one in August, which they don't see a lot of changes happening, but for the one in November. And their expectations that IHC might actually join the MSCI EMEA, forgive me for all of these letters, the standard index over there. IHC is, of course, one of these interesting companies here in the United Arab Emirates. Stock has been rallying. We've said over and over that we don't really understand where the strength is coming from. So joining the MSCI benchmarks would be a pretty big deal for the region here. And even Dubai Islamic Bank, we could see some weight increase on the MSCI benchmarks. And that could trigger up to 148 million of passive inflows, $1 million, that is, of passive inflows, according to ESG Hermes. Etisalat as well could see an increase in weight on those benchmarks. So these are three key names to be watching moving forward.
Farah, thank you so much for being with us. That is Farah Bakhri, our stock reporter here in Dubai. The Delta variant is rising in China. Over half the provinces now have movement restrictions. This is the level of concern. You're looking at dollar-yen being at the highest in a number of months. Likewise on dollar Swiss. So you're seeing a strong flow of money up for 8 days in a row into the Swiss franc. The yen is reacting perhaps a little bit more so, Yusuf, to the fact that 10-year government bond yields there have gone to zero. That's the first time since December. So again, two central banks, the Swiss Central Bank and the Japanese Central Bank, the BOJ, both going to have two battle royals on their hand. One is about yield curve control, and one is about the strength of the Swiss franc, which we know the Swiss really want to push back against.
Yeah, so we're getting very different messages from bond markets versus what we're seeing in the equity markets. In terms of sentiment in Asia, and really two things that caught my eye. One is the implications of the spread of the Delta variant, which is beginning to disrupt a little bit of economic momentum in China. The implications for GDP, for economic growth in the future. That is an important component. And then the other bit of that is this tempering of language, right? Chinese state media walking back a little bit in terms of their initial attack on gaming companies and basically Tencent Holdings being able to bounce back. We're in the break at the moment, but we will be out of the break shortly. So that's an important one to look out for. U.S. equity futures, the S&P 500 mini called flat as well. The market looking for a bit more direction. This is Bloomberg.